You're subject to income tax or capital gains tax. You're subject to income tax or capital gains tax, depending on how long you held the asset for. This is where the power of the crypto IRA really shows itself. All transactions made inside of a crypto IRA are tax-free. In addition, unlike when trading on regular exchanges, you don't need to track and report on all of your transactions. Number 2, built-in cold storage security. One of the most important parts of crypto investing is storing the funds securely. If private keys get lost or stolen, those funds are gone forever. If you don't want to deal with having to create private keys, secure them, and manage them yourself, a crypto IRA is a great option for you. At iTrust Capital, we have built-in cold storage security from our partners at Coinbase Custody, the world's most trusted cold storage provider, so you can focus on crypto investing. Number 3, low fees. At iTrust Capital, we have surveyed the entire industry and have made it our mission to have the lowest fees. Other crypto IRA providers will charge up to 12% for you to purchase crypto, including adding hefty monthly fees as well. We charge just 1% per transaction with no sign-up fee and no monthly fees. Number 4, lots of options. Options, and more options. We strive to make sure our clients have access to their favorite cryptocurrencies: Bitcoin, Ethereum, Chainlink, Cardano, Polkadot, and many, many more. You can log into the platform and buy or sell anytime 24/7. We know that the industry moves fast and new exciting projects come out all the time. We're constantly updating our platform to provide a variety of opportunities for you to choose from. Number 5, customer experience. I hate talking to robots on the phone just as much as you do. It just feels like you're stuck in phone jail. We've made it easy for you to get in touch with our customer experience specialists who help guide you through the process of setting up your new account. In addition, existing clients also have access to the team to make sure that you always feel taken care of. Tax benefits, cold storage, low fees, tons of options, and amazing customer experience are just some of the benefits that iTrust Capital clients receive. To learn more, visit iTrustCapital.com.
Yeah, we got to turn the mic on. How you doing, everybody? It's Michael Hayes, your friend and sponsor here at the Living Legacy Group, and we'd like to thank you for joining us this Friday evening. We got a lot of good information to share with you today. We're going to be exploring the world of cryptocurrencies. At the same time, we're going to be exploring some new technology and cold storage containment for your cryptos. And we're going to be doing some online live trading using the Pocket Options platform. So before I go on with that, I'm going to do my deal here. Hold on one second. I have to learn how to get this stuff ready for you guys. All right. Put myself here and put my. So again, I'd like to welcome you to the Friday Night Tradings with the Living Legacy Group. And I would like to especially thank all of my friends and family that support me in my endeavors to be a professional trader. First of all, I have to give my little spoofs here. Thank you to my brother at P&D Uniforms. You guys need to get out there, and if you need any scrubs, any kind of uniform, school uniforms, this is P&D Uniforms, and they're located 20936 Kelly Road in East Point. And if you want to see me this Monday, we're gonna be in a parade, so I'll be there along with him celebrating the Memorial Day weekend. Also, because I love entrepreneurs, I want you to make sure that you stop by my cousin Marie. She is an independent of what is it, Dazzling Jewels. Get with her, and she's got fabulous material, and she can help you earn a little money. So do those things, and if you want to contact me on TikTok, there I am, Pop. And if you'd like a shirt, get back to P&D Uniforms, and we will get you some of those shirts. And we have also all sorts of things that we'd like to give away. But getting right to tonight's show, we are going to first explain to you what this platform is. This is called Pocket Options. And what Pocket Options is a trading platform for retail traders. I am considered a retail trader because I'm not on Wall Street. I do have the ability to trade in all of the markets, whether it be currencies. They do have some cryptos. They have indices, they have commodities, and they have regular stocks. So I'm going to dive into that, but I just want to give you a quick tour on what Pocket Options is. So you can invest. The minimum is $5, and you can the minimum trade would be $1. Now, when you open your free virtual account, it's so simple. You just fill in your email, make a password up, make sure you're not a robot, sign up. That's it. And once you get your account established, then we'll go through and we will just we'll help you get registered and everything like that. So that way you'll know that everything's correct into the system, and we'll be able to go along with that. Trying to get a little music in there. Okay, so going down, and it says, why do we choose Pocket Options? And it's flexible trading, comprehensive education. They've got a chat room where you can go and talk to people. You can ask your questions. Diverse trading instruments. So they have all the instruments that you'll ever need, like in indicators, in setting up your charts and things like that. Like I said before, you got your demo account, easy withdrawals and deposits. Okay. The reason we call this, why I am affiliate in cryptocurrency trading, because you use cryptocurrencies to fund these accounts. And once you fund the account, then if you profit, then you'll get that profit back in that cryptocurrency, which I think is a good thing, because the way Bitcoin rises and goes in the market, you can actually come out ahead. Another thing that I found out with Pocket Options is they have a bank where you can actually store your cryptos in there, and you can actually get paid, if you want to get monthly, weekly. So we're going to get into that. We're going to get into all that good stuff. But all you have to do is get here, click on this button. They have an affiliate program, which I am in. And like I said in my disclaimer, all of the things that I either promote, I either use, or I'm a part of. There's nothing that I will ever try to solicit or give information on that I have not tried myself. Like I said, it's easy payment method. You get easy trading. You get achievements. You can earn gems, things like that. You can test your luck and stuff like that. You can run this thing. I've got this thing running on my phone. I've got Pocket Options on my phone, my tablet, my laptop. So anytime I get bored or anything, I'll get to the markets, because listen, $1 investment compounded 10 times, that's $10. I mean, you do the math. I don't know. I'm just trying to show you. That's all. So we want to first, before we get into our trading, I do have to keep track of time, because once we start trading, that 45 minutes, that hour will just vanish like that was it. Okay. So before I do that, I got one more shameless plug, and then we'll get right to this evening's trading.
Binance had about a $42 million
South
hack
Korean
at the
cryptocurrency
time
exchange
of,
Bithumb was hacked
We're
for
not talking
$90
about
million.
the tens of thousands, we're talking about tens of millions and hundreds of millions
taking advantage of
dollars being lost.
I believe it was about 7,000 Bitcoin that were stolen from the hot wallet.
Today, holding cryptocurrencies is courageous. Tomorrow, it needs to be customary. It is time to build further on the minds that came before us. Never settle for less. It is here and now that you can take control of your money, control of your identity. Blockchain is just getting started. No more collusion of the centralized. Technology is nothing without the people. Nothing without the resonance of our everlasting disagreement with the status quo. To accelerate adoption, we need a revolution in empowerment. Something more secure, something more convenient. This year, this month, this day, start truly owning what is yours with Engrave.
44,000 Ethereum. That's how much my previous project was hacked for.
As you know, this is not the only case.
That's why we created Engrave.
Our mission is to empower you to truly own your cryptocurrencies in a secure and intuitive way. Unlike traditional hardware wallets that still need a connection, imagine one where all connectivity is removed.
No Wi-Fi, no NFC, no Bluetooth, no USB. We did it, and we call it the Engrave Zero.
We removed all online vulnerabilities. Your keys are never exposed, ever.
Even if someone gets their hands on your Zero, the device is designed to detect any intrusion, and it will wipe all the keys.
We developed our solution with world-leading institutions, and our secure firmware has earned a certification higher than banks. That's how serious we take security.
Transactions are made swift and simple using our mobile app and QR codes. Scan a transaction request, verify and sign it offline, and send the signed transaction back to the blockchain. Your phone has zero information on your private keys.
But it doesn't stop there. If you lose your hardware wallet, you need a timeless backup. Therefore, we created the Engrave Graphene. No more paper wallets. From now on, you can recover your keys from our stainless steel encrypted puzzle.
Le produit Engrave, c'est la solution pour garder vos tokens et votre crypto-monnaie dans un lieu sûr.
To ensure a great customer experience, we involved the end user throughout the entire process. Because of our journey, we deeply understand the need for quality assurance, which is why we make our products in Belgium, the heart of Europe.
Back us today and become part of Batch Zero. It is your crypto. Start truly owning what is yours.
About that, I don't know what happened to that promotion there, but life goes on. Engrave. The only way to keep your crypto safe is to have it offline in your hand, okay? And without this, you can't get to this. So, want more information on that? I'll be more than happy to keep you updated and get you your Engrave Zero. They're actually shipping them out in like 30 days or something like that. So, all right, folks, happy Memorial Day. We want to salute all of the veterans that are out there that have served, that are serving, the past and the present. I know I have family that has served in the forces, and I am so proud of them because they're doing something that I wish I had a chance to do in my life. Getting back to our trading. So what we're going to be doing, I'm going to be teaching you a simple strategy. If you haven't got your Pocket Options account yet, it's very simple. You'll see the link in the description, and you can just go ahead and open that account. and you can follow right along. And I just wanted to bring up some things in the Pocket Options platform that will get you familiar with how we trade. I will be starting a VIP group on Telegram where we'll be sharing signals, and I'll be getting the signals from a very profitable trader who has a 90% success rate. You got videos. And when you join the Living Legacy Group, all of this information is always free. We just ask that you participate in every event and do your best to bring extra income into your household. This doesn't take a lot of time. The reason I trade OTC is that's off over the counter. During the regular times, I have my secondary job, or my first job, that is my Hayes Home Services business, where I'm doing stuff all day, and I really don't have time to catch the daily market. So I've gotten into this thing they call binary options trading, and this is where you're trading on specific times. It can be from let's see, this right here is our time, so you can trade from 5 seconds to 4 hours. So if you were to study the market and find that you like the trade that you want to trade in, say if you wanted, and like I said, we trade all types of currents, products, currencies, commodities. You can get your stocks if you like any of these, Tesla, whatever. Now, this is what I teach this, and I know I'm skipping all over the place. Bear with me, part of me. But look, I teach this in demo mode, okay? I don't want you to jump on here and go gung-ho into live mode, because the first time you lose $50, you're not going to be back. But I want you to get adjusted to how the markets work, how the charts work, the strategies we use, and I'm going to try to cut your learning curve down, because I've been doing it for 4 years and I'm still a beginner, but I've gotten to the point where I can now teach what I've learned and know the values of what I'm gathering to make the Living Legacy Group a real dynasty. I want this thing to blow up huge. I want everybody to live the legacy that's already been passed. We've got so many great people that are going on to the next life. We just lost one of our fabulous singers, Tina Turner. Nobody can escape this thing they call death. But while you're living, enjoy life. Treat that thing like it's precious, because you only get one. I'm not gonna start preaching, but here, look. So, for example, everybody's favorite, we'll go to, matter of fact, let's do Facebook. Since we're doing Facebook Live, we're just going to go to the OTC markets on Facebook. Now, this strategy is very simple. What goes up must come down. Okay, we use simple moving averages, and we use 3 colors. I almost said 4. I had to catch myself. We use 3 colors. Now, when you look at this market, you say, well, I don't know anything about these sticks, candles. These are called Japanese candlesticks. And when you join, we teach you everything you need to know in trading. I myself have graduated from the IM Academy. Yeah, I sure did. I passed everything they had. So I decided that it was my time to go on. So with all my studies, I'm able to break it down into teeny tiny bites so that you'll understand what to look for when you hear certain things. It doesn't matter in the OTC market. It really doesn't matter. But as you get good and better at your winning trades in the OTC market in demo, then we deposit. You know, I deposit at least 50 because I'm always putting in 50 and I'll take 200 out. So I kind of get paranoid after 200, but that's a mental block that I have to work through. And I'll be seeing my friend Andrea Mason on that thing. So I'm going to shoot her a special plug. So what this strategy is we take these simple moving averages. I've already got them set up here. And if you want to find your indicators, they're called indicators. This button here will show you indicators. So what you're going to do is you're going to come down here to the moving average and you're going to click that. I'm going to do this first so I can show you guys. I'm going to close all these. So you're going to click on the indicator and then you're going to click on moving average. Click it once, click it again, and click it again. Now you might as well stay here because there's going to be another tool that we're going to be using, and that's called the parabolic SAR. So we're going to click that. Okay. Now we're going to click on the screen and we're going to set our moving averages. So the first moving average we're going to set that to 3. Okay. And it's going to be a simple moving average. The color is going to be green and we're going to leave that 1 pixel. Okay. I call this our trailer. This tells us where the candles are going in the market. So you can get a good glance on how things are moving, because we're going to be making our trades based on 2 things, based on the parabolic SARs and then based on the moving averages as they cross. Okay. Now the second moving average is going to be the 20 moving average, and we're going to change that to yellow, and we're going to make that 2 pixels. We're going to make it a little bit thicker. We're going to save it, and then we are going to take that third moving average and we're going to make that 200. Now I was taught this strategy by another genius. He's the daytime guru of day trading, and his name is Oliver Velez. And I've been following Oliver for about 2 years now, and everything that I have duplicated that he says, it's worked. So I give him much props. I am going to look into getting into his program. His program is $1,500. He coaches you for life. Okay. Not only that, he funds your account $50,000, and guess what? It's a 60-40 split. And he's given you the knowledge to when to trade and when not to trade. That's just priceless in itself. So I have so many things that I've got my hands in. I just love what I'm doing right now. But getting back to what we're going to be talking about. Okay, so you got to have, it's easier to do trading on a laptop or a desktop, because if you've got a mouse, it's easier to use your scroller so you can scroll in and out and see, like a wide view of what the market's doing, where the trend's going, and to see your directions. Okay, so the object of the game is to know where the market's at. So we start with our daily chart, and when we look at our daily chart, we can back it up, okay? And each one of these candlesticks represents 24 hours in a day. So we have 20 hours in this small candle. It's 20 hours and 33 minutes and 7 seconds, okay? So I'm going to teach you how to dive into that 20-hour candle and make specific trades that we're going to compound $1. So, you can load your demo account up with $10,000, or you can load it up with $1. I like to load it up with $1 so I can watch my progress, so that way when I'm ready to get into the live market, I have the confidence that I can compound a dollar either 5 or 10 times, depending on how I'm feeling and how volatile the market is. Now, there's one disclaimer: binary trading is it's a risk, but it's a calculated risk. Now, people say, well, that's a scam. No, there's a difference between a scam and a risk, okay? We take calculated risk every day of our life. You know, you just don't see it. When you step out and, on the street, that's a calculated risk. When you do anything, it's a calculated risk. But this is a calculated risk using specific algorithms of the market and how the market runs on past structures and past market patterns. So it's something that you can get used to, that you'll kind of get a feel for it. You can pick any hour of the day or night. If you want to trade at night, you can trade as early as 2 in the morning or 3. I get up at 4. Sometimes as I, get up at 3, I got that biological thing that goes on at 3. So I'm up. So I'll trade, and then I'll get tired about 6, and then I'll take another nap, and I'll get up and start my day. But let me get into this strategy. So what we want to do is we want to go here, and let's choose stocks. So you're going to pick each star here. You're going to click them. You got each one of these. You're going to click them like this. Okay. Let's start. Oh, I'll start you off light. Let's go with. We'll go with 4, because you're going to be watching. You're going to be flipping through these stocks. So you got Intel, you got Facebook, you got Boeing, and then you got Apple. So now, remember, we're in a daily chart. So you want to click on this, and you want to go to the 30-second chart. Everything we're going to be seeing is in a 30-second time frame. Now, once you set your time frame up, you got your indicators going, you got your moving averages going. I'm going to explain to you the moving averages and what you're going to look for and when you're going to make your trades. We're going to take our trade down here to $1, and we're going to set this time frame. We're going to use the flag, okay? When you use the timer, when you open a trade, your time starts at 15 seconds. But when you use the flag, you're actually going to use 30 seconds, and that's going to be starting the 30 seconds of the clock. So you might you can come in at the last 10 seconds and make a trade. You won't be able to do that on a regular timer. So you want to set your time at the flag and click this S30. Once you do that, see, it's 9:30 already. Once you do that, you're gonna look for things like this right here. This is a perfect example. You're gonna look for these 2 dots, and when this is here, you're gonna press for a higher trade. Okay, so because this is pushing towards the bottom, we should clear this trade. And go good. So that's all you're doing. You're looking for signals and signs in the market to make your trade. So let's see if we're going to win this trade. And we did. So there, and what we'll do is we'll take that, we'll compound it. It says $1.92, so we'll just go $2. Okay, so the next trade you're going to look for. Okay, let me explain something to you. You see how this red line is smooth? This yellow line is kind of smooth, and you can see the green line, it's kind of jagged. Okay, all of these moving averages flow, and they respect themselves. Sometimes they'll get a little pushy, but they will flow as this crosses, you know that you're going into a up. Oh, I got my let me just do this real quick. Enable auto scroll. All right. So when you look at this 200 and this 20, how they cross, you can see that it is now in an upward trend. Okay. Now during this upward trend, you see all these candles, and you see how they're on the opposite side of the 200, or not the 200, but the 20. Okay. That's another indication or verification that you're in an uptrend, because if you look at anything that was in a, let's find a downtrend. Okay, here's a good downtrend. See, you got this crossover here. Okay, the 20 to the 200. The candles are on the opposite side and they're going down. Okay, and what Oliver has taught is that you go from a narrow state to a wide state back to a narrow. Okay, and that's all you look for. You look for the yellow to cross the red, and you look for the green to cross the yellow. So in the interim, that you could be waiting, because it will be a waiting game. We're going to open trades as we see the parabolic move. So let's see if we can find another one. We're looking for two dots to form. We missed it here. See those two dots there? See, when that first dot appeared, that's because this right here, and this, we would have made this trade, but we want these dots to be like up into this area, okay? And then you would make your trade on that second dot, and that's indicating that it's going into a down reversal position. So we're going to see what we can do here. So it is a waiting game, but if you don't like to wait, you can, put up more pairs. I'm gonna take a hit here. Sorry about that. But you can just put up more pairs. So that's why I said I'll start you off at 4. But when you start to line them up, and also in the OTC market, you want to go with something that's going to be, we're going to take Intel out, 90% and above, because you're going to be getting 90% of the winning trade. So if you bet if you choose to trade $1, then you're going to get 92%, but 92 cents. That's 92% of $1. So as we can see here, this is a thing that I've noticed. When we start to go down, this either has to get accepted and break through the 200, or it's going to be rejected. This right here was what I call a rejection. It came through and it went back up because it still has respect for the 20. The 20 is not ready to come down, but it may force it. So I'd like to make a trade here for that 30 seconds down, because I know that it could possibly break through this 200, but on a 30 second, see, this is where I break the rules because I'm only supposed to do that 30 seconds on this parabolic, but I'm exploratory. I like to do things that are a little awkward. So, okay, so we lost that trade. No big deal. It's only $1. But look, had we done the trade for maybe 2 minutes, you see what I'm saying? So it's up to, I'm going to share with you all the information that I've learned, and you're going to help me, because you may see something that I don't see. That would have been a profitable trade had I gone with maybe the 1 minute. Okay. But right now I'm just trying to show you a specific strategy using the parabolic SAR, and I broke that rule. Sorry for that. So we're going to go ahead and open some more markets. We're looking for, there it is, right? Oh, was that it? Nope. Nope, that wasn't it. I was going to say, you can watch your charts. You're looking for we missed it there. That would have been a great example right there. There's a great example of a good trade. When that first bar, when that first dot would have showed up, I would have pushed the actual higher button, okay, and we would have gotten that trade. I believe that's a 30-second candle. See right here. See that counter, that timer? There's 30 seconds. So if we would have won. We would have got that trade, I believe. Maybe. I don't know. Let me stop talking. So let's do this. Let's change it to 1 minute. Start off. Actually, yeah, let's start 1 minute. Let's see what we can do in 1 minute. So we're going to look for another. We're on Amazon. Let's see what Visa chart. You see that we've crossed the 20. We broke the 200. We expect this to draw back up because this has reached a plateau here. It's way up here. It shouldn't be. We wouldn't make, if we got green dots down here, we're not going to trade on any SARs that are like that. We want those SARs to be right in the center of the next button that's going to come up at the bottom. So you might see, didn't make one yet, but you notice this, okay? Look how this has been a downtrend, okay? This is going to and expect a reversal. This, it seems like it was tested 1, 2. It was tested twice. That was the third time. It went up, came down for a reversal, took a little dive up. Now it's going down. Now I would say that it's going to head back up. So since I'm going to make a 2 minute trade, and I'm going to say, no, I don't know. It still might go down. We're going to go down. We're going to go with this is called a put. Let's go with a 30-second. We're being brave. This is aggressive trading. So we're going to go with a 30-second. Let's see how this trade turns out. Turned on us. See, I should have did that. Dang on. I just should have went with the first mine. Imagine that. Okay, no big deal. See, it's painless when you're in demo mode. And the reason I say that is because there's something about our psychology with real money and risk. We don't like to risk money at all. Nobody likes to risk money unless you're somebody that knows there's going to be a gain in risking that money. So check this out. So now we're going to be probably we're probably going to see those little dots come up here. And we're going to make a $2 trade. Or actually, we're going to need to make a 4 because we're compounding. We made 4 losses. So that's $4. And, yep. Okay, there should be a dot that's going to form here, around here. See, we want this SARS to be right there in that perfect spot. And each time the SARS are above, they're below. And when they're below, they're going above. Okay, so we're going to wait. It went through the 200, came back and went back through the 200, but it's coming. It's going to see it might be rejected here. Rejection, rejection, rejection. Is it going to go through? Is it going to push, or is it just going to flounder? I call that floundering. See how it was rejected? See, that 20 is still strong. It's saying, come bring your butt back up here. There's a rejection. Rejection. Is it going to go through? If it falls through, then we know that it's going to be a continuation. Are we going to get a continuation? No, that was a rejection. See? You got to watch it. Nope. Try to push. See how it pushed it real hard? This is fun. This is fun to me. This is exciting. This is what I do when I get off work every day for the past 4 years. This is what there it is. There it is. So now we see that it pushed all the way through. This is our floor. Okay, this is a resistance level because we can see that it's came here before and it stopped back up. So it came down. This could be a good chance because those, it could, continue to go down or it might jump back up. So let's see what happens. We're going to go ahead and make that 30-second trade and we'll see. Oh, see, I went in on I didn't look at the timer. I went in on the last couple seconds, so I lost that one. So that's okay. So we're compounding. 8. So let's just wait for the star like I'm supposed to. Mike's always trying to be above and beyond. But look at that drive. Man, that's what gets you. Because you kind of know. Each one of these candles has a name. Okay, that's a spinning top. That's a doji right there. That's a top. This is a bear candle. Elephant bar, what Oliver calls it. See that continuation, but that was really volatile. We didn't want to go on that. There's another indicator that we can throw up on the charts. Hell, I gotta watch the time. See, it's 9:45, man, and we've only been on for a couple minutes. So I can get you on a Zoom. I'm going to be opening up a bigger Zoom. Is when I get more people to come in, then I'll be able to get a longer extended time on Zoom. But I usually do private Zooms, 45 minutes, and it doesn't matter. I'll stay on there for hours. I don't care. If we just got to keep on rebooting it or whatever, we'll get the time in. But all you have to do is email me at livinglegacygroup@gmail.com. And this is the greatest thing. Let's see. Let's go with a different pair. Let's find what's FedEx. What's FedEx doing? So FedEx is doing the same thing. We got that. We're waiting. That might be a good one. You might have to wait for that double bar. But you see how it went up and it came down. So we're going to wait on this one. Let's zoom in a little bit. I just put a trade in for a lowered put. I feel that it's going to go down for that 30 seconds. We got 10 seconds into it. And it'll knock you out in the last half a second. So be prepared for that. See what I mean? So come on, give me a reversal. Give me a pullback. There we go. That's what we like to see. That little pullback. And we have now collected $15. $15.36. So now we go $15.36. Okay, that's our next trade. So we go and check out the markets. See what Microsoft's doing. Microsoft's coming. It went up. Remember, we're on a 30-second chart, so each one of these candles are 30 seconds. So this is what it looks like in a 2-minute. Oh yeah, this is what I wanted to also tell you. I noticed this with my buddy Alan. He's a good trader. He's been trading with me for a couple months now, and he's getting better, and he's learning. I got a feeling that boy, when it breaks loose for him, ain't no stopping. So my hat's off to Al West for joining. He joined and everything. So fine. Okay. So check this out. This little, I'm going to switch to a 2-minute chart. See that 2-minute chart? You see how that candle moves there? Okay. So with that movement, that's what we're seeing in a 30-second. We can go down to 5 seconds, but we're going to stick with 30 seconds because 30 seconds is kind of hyper trading. When I teach my courses, they're either going to be 10-minute trades or 5-minute trades. And we're going to walk you through everything with baby steps. I've got the perfect program to teach you about that. Let me pull it up. Oh, no, I'm not going to pull it up right now because I don't have that much time. I've only got 12 minutes here. So I just want to get a couple more trades in. You see how that market is pulling down? You'll always notice it. Whatever market it is, that 200, it either goes above, it comes down, it does a little weavy thing. No matter what market it is, no matter what pair. Let's look at Visa. Visa, same thing. You've got you're in a downward trend. It did a reversal, a strong reversal, and it's going in a downward continuation. It's continuing to go down. I'm not going to be using no big words and stuff like that. Y'all, it's red, it's green, it's yellow, it's dots. They go up, down. Everything always goes forward. Don't let them complicate this thing. Don't let nobody deter you. Build your own strength. Build your own strategy. This is a real thing. Because if you put in $50 and you can take the $50 and you can put it in what they call the safe. Okay, they got a safe in here. I don't know where it is. Where is it? Markets. Is it in the markets? No. Maybe it's finance. There we go. My safe. Okay, check this out. Now, if you guys just want to be lazy, look at this. Open your personal safe savings and receive passive income up to 10% per annum. That's per year, okay? Now, you can get a USD safe, a Bitcoin safe, or an Ethereum safe. Now, I usually like to deal with Bitcoin because it's much more easier to get on my phone. I can get it through Cash App just like that. I do have a Coinbase account. I do promote Coinbase, and I am going to be starting most of our members out on Coinbase, but as a not just a holding spot, but as your reserve, because you're going to need to have some in reserve. So check this out. This is going to calculate your profitability. Okay. So let's just do. I'm going to do the US safe because it's. Let's see. Calculate. 10%. If you put in the initial $5,000 deposit, no, that's 50,000. Let's do. Oh boy. Let's do $100. $952. All right. All right. You got $100 in 12 months. If you were going to just put in a monthly top up of $50, okay? That's $38 total income, and your final safe balance would be $738 from $100 in 1 year. Just leaving it there. Just leaving it there. So imagine if you put $1,000 in there. Okay. And look. This they give you the interest payment plan, what your balance would be. This is such a great platform. You can't. I mean, I don't know. I leave it up to the people that that want to get an edge in life. Everything's about getting an edge nowadays, and oh, my music. I don't know why that thing is doing that like that. But, give yourself the chance. Has my microphone been on? I hope the mic's been on. I've been doing it. I did a show one time. The microphone wasn't on the whole dang on show. I was so upset. But look, give your chance to get ahead in life, okay? Nobody's going to give you nothing. You're gonna have to come out here and snap. There are so many open opportunities. Don't let just one fly by. Try something else. Join us. I have so many friends and partners that are into all sorts of unique opportunities, and you can always find me here. Email me, Michael or not Michael, but www.livinglegacygroup@gmail.com. Guys, thank you once again for joining me this Friday. This is the 26th of May. Congratulations to my daughter on her graduating. We're going to be throwing her a little shindig. I don't know when and don't know where, but I know we're going to be doing something good. We'll see you tomorrow, Delano. Everybody have a peace and safe holiday weekend, and we'll see you next time. Friday Night Trading's the OTC market with me, Michael Hayes at the Living Legacy Group. Peace. Good morning, and welcome to a brand new year, to a brand new Living Legacy Live. My name is Michael Hayes. I am your host, your sponsor, and everybody in the backfield. Good morning. I want to thank you for joining me today. I keep looking over here because I have to switch some cameras. I'm trying to you never know when these things will go right or go wrong. So we're going to kind of wing it through here. And we're going to check. There we go. That's the camera shot. Good morning, friends. Your friend and sponsor. So I want to take this time to welcome all of our guests all over the world in YouTube land. This is the Living Legacy Live. Here we are a network marketing company, and our thing is to build generational wealth and live a legacy that's already been laid out for us. We have so much opportunity out here to do things that some people may find crazy and stupid or whatever, but there are possibilities for advancement in your own psychological economy and your wallet. I know we're going through some times right now, but you know what? I visited a church last night, thanks to a friend of mine, very, very dear friend. And the pastor, minister, bishop, he had a really good talk on dreaming again. That's always been one of the things when I started out in this endeavor. To the late and great Mr. Ty Best of the Wealth Builders. He used to say, dream big, and I used to dream. I used to dream when I was a kid, and dream of things that I would like to see in my future. And now that I've gotten older, there was something that happened to me in my early 50s. I like to think of it as an awakening. I had been introduced to a certain philosophy, I would say, of in the New Thought movement, and I was seeking always to know more. And I found a mentor, the late and great Mr. Bob Proctor, and I had been following that guy, or Mr. Proctor. Forgive me. I've been following Mr. Proctor since 2006. And there's a backstory on how I actually got started into researching this unknown phenomena and this unknown. It might not be, it's not unknown, but it's maybe unknown to you. So I'm here to enlighten you. But there are things that we can do in our lives that we can actually get what we desire to have. Sometimes we feel that, man, that's just too out of reach because of the fact that, I look at it as a 30-day time limit where you have to, let me quiet my phone before it starts ringing, where you have to either adapt, keep up, or fall by the sides. And I've been in all of those positions in my life. And now that I'm able to realize all the miracles that happened to me in my life, I'm able to share it with you in this platform on YouTube. I do have another segment. It's called the Manifestation Scrolls. And that we go into more deep psychology of how the mind works and why we do certain things what we do. I am an alumni student of the Proctor Gallagher Institute. So I've been studying diligently for 5 years. I would say more than 12 years in the field of the universal laws and how they govern us, and they can be manipulated by your attitude and the thought that you hold within. So, getting off of that, we're going to go right in. Today, the markets are not going to be open. I'm pretty sure everything's closed. You know, your retail outlets are going to be open, but anything like banking and federal, it is the new year. So I don't think there is going to be anything going on in the market. But what we will be doing today, we'll be following the schedule that I put out there over the weekend. It's 8 o'clock and we're welcoming all the guests. So please, in the chat, if you would please type where you're from, your country, your city, your state, your planet. I don't know, wherever you're from and you're getting this live stream, please let me know. It helps me know that I'm getting out there to the right people. And also, like and subscribe. We're always going to say that every YouTube video that I have watched in my YouTube journey, there is always a like, subscribe, and hit the notification bell. We haven't set up all those little, the little screens and things like that pop up and look professional and stuff like that. Hey, I'm an average guy seeking just to help the average person that doesn't have all the tech savvy and things that they see on here that these guys are doing. There are things that you can be tricked by your eyes, especially now that AI has hit the mainstream. And you can see that in the graphics that people are creating. These things are created just by you asking this technology, this artificial intelligence, to just do what you want. It can build anything you want, answers questions. So as a human being in our society, you're going to find people that are going to take advantages of this I can't say new technology, but this mainstream technology. And you have to be careful on what is the truth and what's not. And that's what I'm going to do, is help you clarify the truth of your being, the truth of the universe, and everything that I have collected in the last 59 years. I'm coming up on 60. It'll be in April. Woo! Thank God that we're even able to see a new year. We did go through some health challenges coming into the later part of the year, and that's why we decided, instead of I've been doing this thing so because there was a fear that I won't be able to make the type of income that I am using these. But when I got into that situation where I couldn't use these, the income stopped. So that's why, one thing they teach in the Proctor Gallagher Institute is you are responsible for your own economy. You can set up multiple streams of income. Mr. Proctor did that. Everything that he said, like he said on Born Rich. You guys, I will be broadcasting that. I've got to get permission, though. I will be broadcasting Born Rich. Everything that he said, I found the secret in Think and Grow Rich. And he swore he'd work it until he died. Until the day he went on in his transition, he worked that program, and he had businesses all over the planet. Hey, I've seen things in my own life that I know that, with the right mindset and the right attitude, you can have what you desire. Okay, thanks for joining again. If you stop in, please, even if it's after hours and you're watching this stream as a recorded stream, leave a comment in the section, in the comment section. If there's a pair, or if there's a stock, or if there's a coin that you would like to know, answer any questions, I will be happy to answer those in the chat. I am kind of solo. This is what it's about, putting something together from nothing. So what I did was put this program together for the average person that is wanting to get into the new future of money, and that is cryptocurrency. So right now we're going to switch. I've got two mouses over here. So I'm going to switch to the, let's see here, where are we at? I'm going to switch this camera off, and we're going to go straight to the charts. Where is it at? Oh, there it is. All right. So to start off, this is going to be, I know we don't have any guests yet, so we don't have any questions and things like that. So I'm just going to move on. Today is just going to be a filler through to go through the day. If we don't go by the schedule, hey, it's no problem. But I made that schedule so that people can pick the times and choose what they want to join us on the live stream. So just bear with us. This is, like I said, it's brand new. We are open to the public. We are here in Romulus, Michigan, and that's on the East Coast. Go Lions. They stole it. I don't care. We'll save that for another day. I'm going to put myself up here in the corner. No, that's not it. Let's see. Hold on one second, folks. Let me see how I can do this. Oh, no, I don't want to do that. I want that little camera. Where is that little camera at? The zoom camera? Is that what it was? We're going to see if that, no, it wasn't the zoom camera. It was, there we go. Okay. So I'm going to move this around. I've got to move it out the way. And we're going to shrink ourselves a little bit so I'm not in the way. We're going to pull us over here so we can join you. And you can see that this is live. This is the first day of the year. Okay, we got that locked. We're locked and loaded. So, where I gather my information through the years have been through the news and through joining certain programs, Telegram groups, YouTube channels, and things like that. But what I found is that the more information I got, the easier it was for this learning curve that you might go through in this new endeavor called trading. So don't get discouraged if you just can't, if you seem like you can't keep up or you don't know, because I'm going to give you some information. I will type these things in the chat as we take breaks and stuff like that. One of my main informational sites is what you see here. It's called Cointelegraph. I come to Cointelegraph to give me the news on what's happening in crypto. There's tons of news out here on the stocks, the ETFs, the commodities, futures, all that's out there. This is strictly crypto because I do believe this is the future of money, and don't get left behind. Even if you hodl, what we call hodl, that's put away a little bit of cryptocurrency. It will pay in the future. Maybe not, well, I can't say in your future, but I know in my future it's going to provide some stability to not just me, but my family. So we go to Cointelegraph and we come here to see what the latest news is going to be. And you can see here we've got these snippets that go through, and this one is going to be a good one. We're gonna this was released 9 hours ago, and it says BTF or Bitcoin ETF launch may be a letdown, but still could attract trillions of dollars, over time. Investors may what I'm gonna do is I'm gonna let it play. Okay, here we go.
Investors may be disappointed by the initial performance of spot Bitcoin ETFs, but don't underestimate its impact over the long term, says VanEck advisor Gabor Gurbax. Join us on social networks. The launch of Spot Bitcoin BTC $42,680. Exchange traded funds, ETFs, won't likely have much impact on Bitcoin, but could eventually bring in trillions of dollars to the cryptocurrency sector, according to VanEck advisor Gabor Gurbax. In a January 1st post to X, formerly Twitter, Gurbax argued the initial impact of a Bitcoin ETF is being drastically overestimated, estimating it may only see net inflows of around $100 million from mostly recycled money from large institutional investors upon launch. In my view, people tend to overestimate the initial impact of US Bitcoin ETFs. I think maybe a few $100 flows, mostly recycled money. Long term, people tend to underestimate the impact of spot Bitcoin ETFs. If history is any guide, gold is worth studying as a parallel. https://t.co/6vbcon9ac09. Gabor Gurbax, at Gabor Gurbax. December 31st, 2023. However, Gurbax was far more bullish about the ETF's impact on Bitcoin over the long term, pointing to the gold price appreciation that came after the launch of gold ETFs. Advertisement. eToro, join a secure, trusted platform and get $10 of free crypto.
Where I was at.
Ad. On November 18th, 2004.
Okay, we're going to stop it there. But you get the gist of it. You can come here and you can get your daily news. Here's your news, and it's going to give you news on all the coins. We're going to have a live where we're going to have a Q&A that's supposed to be at 11 o'clock, 11 a.m. And you can ask your questions on what coins are, what the markets are. These are the market prices and the indexes. This is very good to know. Cointelegraph has a magazine. It says Cryptopedia, so it explains how you can learn this. All this stuff, do this, on your spare time, because this is something serious that you can lay down and have it running in the background for you. Because what I'm going to show you later on today through getting my own SEP IRA. I made that IRA in October, and it's already grown, and it's going to continue to grow. And lucky me, if you guys are younger in years, the way it works is you're able to get distributions from that IRA at a certain age. I think it's 59. I don't know. We're gonna explore that too. Anyways, so let's see. So we're gonna go over what Bitcoin is, Ethereum, the altcoins, the blockchain, business policies and regulations for people that are unsure about legality and things like that. And there was one in here that it caught my attention because I had made a mistake on trying to explain the Bitcoin halving. So I'm going to see if I can pull that up. Where was it? Let's see. Was it here or was it in? Oh, okay. I thought it was over here. But let me digress so we're not, I got to keep my eye on time. It's only 8:15. So trading TV Live isn't even open yet, and we'll be, putting those guys on at 9, watching the opening bell, looking at the charts, looking at my chart. Hopefully that you've got your own account open. You're able to open your chart. I'm able to do this. If you really want to get serious into this thing, it's not mandatory, but it does make it easier. You can either watch the telecast or the stream on your phone and use your computer to follow along in your free Pocket Options account. It'd make it a whole lot easier. So that way I use 2 screens myself, so I can monitor the show, and then I can work my charts and everything else on the second screen. So that's just a little tidbit. It makes it a lot easier for you because it can be frustrating if you're trying to work on one thing and you're trying to see what I'm trying to. This is the stuff that I went through learning this, because nobody was the courses and the groups that I joined for money. You give them money and they say they're going to be there, and the way they're there is they send you to this chat. They're on for 30 minutes for the day, and then they disappear, and they just continue to chat you to give you this information. I want to get you. I want to take you by the hand. I want to teach you. We're going to walk through this together. I decided to run this thing. You don't have to be on the charts 8 hours a day. I'm desiring this to be my second income because the phone hasn't rang for any kind of repairs yet. But I know once the repairs start, this channel will run by itself, and that will be how we set up multiple streams of income, because there's a lot of things in the channel that will be monetized later on for future. So this is what Cointelegraph is, and it is a very, let me put this, I'm gonna copy this, put this in the chat, paste. All right. So this is where you get your news. Now, this site is called CoinMarketCap. CoinMarketCap gives us the information of what, here it is right here, what the coins are, how much price, what's the price in the market cap, how many currencies there are, what they do, what programs. You'll find that the top 3 coins right here are considered stable coins. Solana, XRP, USDC is a stable coin. Sorry, Cardano. We're going to discuss why these are considered stable coins and why some are considered tokens. If you want to know information, all you need to do is click this button here where it says Bitcoin. This screen will then show you the actual currency. It will show you the exchanges that you can trade Bitcoin, or where Bitcoin is being traded on. Here it shows you the markets, the news, about, and your analytics. You can see Bitcoin does not sleep. Bitcoin runs, cryptocurrencies run 365, 24 hours a day. So you do need to, sometimes you need to be aware in certain market crashes to cut your losses and hodl the coin and then pick it back up when the price is at a lower price, because the object of the game, buy low, sell high. Buy low, sell high. And that's how we're going to establish this so-called income. Yeah, so thanks for joining. Let's see. Oh, what I wanted to show you here was, where is it at? Is it markets? It may be markets. We're going to click on markets here. Oh, no, that's not it. That's not it. This is it, the website. Okay, so each one of these coins has a website. So when you click on that, it's right down there. When you click on it, this will actually take you to the open source Bitcoin. Folks, do yourself a favor, come here and snoop around. Snoop around, see what this thing has came from since 2000 and I think it's 2008 or 2000 and I have to get my, well, here it is right here. We can actually, what is Bitcoin? So we're going to watch this video.
What is Bitcoin? Bitcoin is the first decentralized digital currency. Bitcoins are digital coins you can send through the internet. Compared to other alternatives, Bitcoins have a number of advantages. Bitcoins are transferred directly from person to person via the net, without going through a bank or clearinghouse. This means that the fees are much lower. You can use them in every country. Your account cannot be frozen, and there are no prerequisites or arbitrary limits. Let's look at how it works. Several currency exchanges exist where you can buy and sell Bitcoins for dollars, euros, and more. Your Bitcoins are kept in your digital wallet on your computer or mobile device. Sending Bitcoins is as simple as sending an email, and you can purchase anything with Bitcoin. The Bitcoin network is secured by individuals called miners. Miners are rewarded newly generated Bitcoins for verifying transactions. After transactions are verified, they are recorded in a transparent public ledger. Bitcoin opens up a whole new platform for innovation. The software is completely open source and anyone can review the code. Bitcoin is changing finance the same way the web changed publishing. When everyone has access to a global market, great ideas flourish. Bitcoins are a great way for businesses to minimize transaction fees. It doesn't cost anything to start accepting them, and it's easy to set up. There are no chargebacks, and you'll get additional business from the Bitcoin economy. For more information about Bitcoin, visit weusecoins.com.
All right, so that was a quick little snippet on what Bitcoin is, and I know there's going to be tons of questions about it still, and we're going to inform you. Like I said, you know, we're going to click back and show you exactly where this site, where we picked it up at. It is right here. This is called CoinMarketCap. Okay, I'm going to put this in here. And here we're going to go, let's go back to the first page. So that way people, when they get ready to get on here, and this, we're going to copy this and we're going to put this into the chat. So that way the people that, warning, heads up, info. Let me get a, I got a warning. Let's see what my warning is. Okay, these partners. When you turn on content ID matching, it generates claims against others uploading content porches. Okay. Uh-oh. Okay. So I may have did something wrong here by broadcasting it. I don't know. Let me see. These features are only available partners. Okay. So hang on one second so I can review this. Click add channels. Oh, okay. So it's telling me I need to add this to my add channels list. We're not, YouTube is not. Uh-oh. What's going on here? I gotta see what's going on here. Oh, it says streaming is kind of slow. Blah, blah, blah. Let's see. But anyways, so this information, I'm going to have to, exempt channels from content ID claims. Maybe the content, maybe that video, I don't know, in YouTube world. Like I said, this is new for me. I didn't have any problem. I shouldn't have closed that. Anyways. So this is CoinMarketCap. I come here to get all my information. Let's see. So, for example, let's go with Dogecoin, because Dogecoin has been one of those coins that, was adapted by Elon Musk and everybody. So what is Dogecoin? Did you know Dogecoin has a website? So this is the website here. So you can come here, check it out. You can always come to each and every one of these. Now this is considered an altcoin. So that's there. Close that. Uh-oh, we closed the wrong one. We closed the wrong one. Okay, so we're going to close that. Close that. Cointelegraph. No, we're going to keep that. And we're going to go CoinMarketCap. So that we don't, I don't know what kind of violation. I don't need any violations. So what we're going to do is I'm going to, now it is 8:30. 8:30, we're going to go over to weekly overview. That was sort of what we're going through, the weekly overview. We will be using this to research the coins. We used Cointelegraph to then get the news on the coin. We then switched to the Traders Live TV. I don't know if they're going to be on today, but we will check them out to see if they are on. And I'm going to do some research to see what kind of violations I made. Also, I use, this is my trading platform, Pocket Options. I don't think they're live today. Nope, they're not. Oh, I guess. No, that's December 29th. So we'll probably play an old, we'll play Friday. But anyways, So this is the Pocket Options platform that I do my trading from. So what we do is we enter and exit our trades on the MetaTrader Pocket Options platform, and then we do our analysis on TradingView. So when we use TradingView, we can follow along with most of the population that uses this platform. They're always using, TradingView is used by most of the people that have their own platforms. And let's refresh here to see where we're at. So thanks for joining me. This is a kind of a trial day because the market is closed right now. Bitcoin is still at 42,713. So, yeah. So like I said, we're going to go into some past videos, and we're going to come into some training at 11. What is it? It's 8:30 now. Let's see about Trader TV Live, December 29th. Yeah. That's the afternoon. This is the afternoon. This is the morning. This was the 28th. So let's go with the 29th. All right. So stay tuned. You are watching the Living Legacy Group trading channel. And we are going to run this program. If it wants to. If it wants to, here we go. This is pre-recorded, so I will be back in a few.
And just like that, it is the final trading session of 2023. What a year it's been. We'll recap a few things, a few important notes, a few data points here going into the final session of the year. Not much to look forward to as far as economic data today. Market kind of flat on the week. We'll have Michael Noss coming up. He's going to touch on a few ideas going into next week. But impressive numbers across the board. 24.6% right now for the S&P 500, about 14% for the Dow. NASDAQ has led the way all year long, continues to 54% to the upside as we head into the final trading session of the year. It's been just a monster year for tech. We'll wrap up things for 2023 and look forward to what is to come going into the new year. Santa Claus rally in full effect as well. We're up about 1%. It's not huge, but it's in line with the historic numbers for the Santa Claus rally, positive on the week anyways. It's the final trading day of 20. It's Friday, December 29th, 2023. TraderTV.live starts now.
Would you like to know how using nothing but the simple standard indicators that everyone has on their trading platform and a startup account with just $1,000 in it, I was able to generate over $5,600 in profit?
Crazy. Absolutely. Yeah, it's been a pretty impressive year right across the board for this is the Qs, but the Nasdaq in general, right at the highs. We're at all-time highs. The S&P creeping back towards that all-time high. Look at this move, even just from the October lows. Like just from the October lows, this market has done nothing but go straight to the upside right across the board. If you zoom out even further, you get a little better idea of, yeah, the year started way down here. The Qs were $260 when the year started. 261, 262, thereabouts. If it was January 2nd again and someone said, just buy the Qs and just hold it until the end of the year and you'll probably do better than most.
Yeah, you would have done really well.
It's impressive. But yeah, here we are. Last trading day of the year.
Yeah, it was a good year.
Yeah.
For the exception of that, that period between mid-July to mid-October when we were selling off hard. But yeah, those were buying opportunities. Seasonality really did come into full effect again this year in the later part of summer, early part of fall. Hey man, 57% on the NDX. No complaints here, Brenda.
Yeah, it's unreal. AI, obviously the main topic of the year as far as what has led strength-wise. We'll touch on some tech names obviously coming up. Just to recap, if you missed it yesterday, this was what happened across the board. Pretty flat. As I said, NASDAQ down a little, S&P up a little, Dow and Russell pretty much flat on the day. Futures today, all green, but not huge numbers to say the least. Yeah, a few things to discuss moving around as far as individual names are concerned. We'll get into that coming up. But Neil is off, enjoying a long, extended holiday weekend going into the new year. Obi in for Neil. It's good to be back. Good to be back with both Sean and Obi today. Good morning, guys.
Morning. Morning, Brendo. Good morning. Welcome back, Brendan. Hope Neil has a great holiday today, but it's going to be a good day. Why not? Heading into the
day of the year?
Yeah.
Be so.
What a fantastic year.
Oh, boy.
I mean, oh, boy. Yeah, there we go. We already have the line. The oh, boy is already out.
I'm just imagining where we were January.
What are we going to do today?
December. I have no idea. We were pretty flat yesterday.
Welcome.
Spy.
Yeah, welcome everybody. Glad to be here with Obi today. It should be another great day. There's a couple names moving around. Crypto moving around. Shout out to Nimit. He said crypto's probably in play today. You're right. I actually have. And this sticky note is going out, and it's a name that I was long, and I'm not anymore. It's going to be Hut 8. I like Hut 8 today. I feel like there's a good opportunity there with some news about the Celsius network. I like it. I feel like it can get going here. It's actually starting to go right now. It was just at $16. Well, I mean, you know, kind of these dark pool dumps and whatnot. But here we go. Let's see if we can get this going upside a little bit here for Hut 8 again today. But yeah, no, the market, what a wild one. We are going to have the podcast tonight. Make sure you watch that tomorrow morning. It was well received last week. That should be a lot of fun there with me and Brendo. And then, yeah, I just feel like, you know what? Energy, pretty depressed right now. There could be some trades there. But yeah, NASDAQ. You know, another name here that's going to be on the sticky note, I'm just working on it. The sticky note's done, I just got to get it out. AMD, I feel like could really, if there's going to be names to look at today, I feel like AMD and ARM. Stay with the names. You mentioned something, the only name that's doing Arval.
Oh yeah.
Do you want to explain what Arval is?
Just relative volume. It's doing a little bit more, well, a lot of bit more than it normally does. Fisker is doing over like 25x Arval in the pre-market. So
yeah, so Fisker. Yeah, so the reason why we talk about that quickly, it's going to be on the watch list. Make sure you grab that watch list.tradertv.live. I see you have it up, I have it up, we all have it up. Can't we all just be friends? You know, but if everyone checks that out, there are going to be names on there, and that's the thing. It's all about preparation, and I feel like preparation on days like today is what really makes the difference between, you know, sort of a rookie trader and a more veteran one, and that can also help with your confidence. You know, because if you're going to sit there and trade a name that's not really moving around too much, don't expect too much.
Yeah.
You know, you have to go in with some expectations, and that's why we talk about relative volume. We expect Fisker to be on the move a little bit today. there's news. We'll talk about the deliveries, and like I said, it's on the watch list. Look for names that are moving around. That's why I shout out Nimit and some of you other traders in there that are looking at crypto, saying, I bet you crypto is going to be on the watch list. Someone even said or on the sticky note, Fisker is going to be on the, and you're right. It's both those names. So I'm just glad that the community is subscribing to the watch list, checking out the sticky note. I know, hold up what you have there, my friend. There we go. And then we've even talked about it too. Neil's got sticky notes. He's got his little iPad sticky note there. And I just think it's all about preparation. And that continues to be the case every single day. Because you got to hit the key. If you're going to sit here and trade, you got to hit the keys. If you're going to hit the keys, you better have a reason to do that.
Yeah.
So that's why we're sitting here ready to get all prepared up and everything. I had a great night. Wife and daughter were away. So me and my son, we played some... I think it's called Super Mario. It's the new Mario. It's like a Mario Wonder, I think it's called. It's on the Switch. It's really fun. It was really cool. Pretty easy game to play with. He's 11, so he thought it was really easy. Then we played some FNAF Friday, Five Nights at Freddy's. He's downloaded some game called Security Breach. And don't jump scare me like they do in FNAF. I didn't even know what the hell FNAF is. Now I'm using it all the time. Like my kid, like now, I used to call it Five Nights at Freddy's. Or no, Friday Night at Freddy's, but it's called Five. Anyways, it's a stupid video game. I don't know if anybody knows about it, but
I have no idea. What's it about? It's like a quick.
It's like, you ever heard of Chuck E. Cheese?
Yeah.
So it's like animatronics that have gone bad.
Okay, and so you're fighting.
Yeah. So basically, it's like you go into this old Pizza Hut, basically like a pizza. It's like a Chuck E. Cheese.
Yeah.
And it's closed down. It's run down. But then there's these animatronics that are like kind of your friends, but kind of not. And you have like little missions that you have to complete. Okay. And then all of a sudden, like one will just show up behind you and like scare you or whatever. Right. And those are like those jump scares. So I think
sounds fun.
Yeah, it's really fun. It's fun. He likes it. Anyways, all right. Let's go back over, talk about stocks, and I'll get the sticky note posted.
All right. We were just talking about that Leave the World Behind movie. It's Sharif's halfway through it and a little surprised at this point, but trust me, it'll all make sense.
All right.
It's very good. All right, let's touch on a few things here as far as what is happening so far today. Sean, you were mentioning, we're going to record the podcast tonight. That'll be available tomorrow. Best week by far, by the way, Sean, so far last week for the podcast. So thank you all, by the way. Make sure you subscribe to that and come join us Saturday mornings at 9:30. We saw this earlier. Tesla on watch once again this morning. Looks like they're narrowing down their search for manufacturing facility in India. They have a city located apparently and some property located, so that's underway. Lyft and Uber on watch this morning. Yeah, one of the best performing S&P 500 stocks so far this year is Uber.
Yeah,
I mean, a little bit surprised by that, but obviously went into the S&P 500 going back a couple of weeks ago. We had yields back to the upside ever so slightly this morning. I mean, it's been a quiet week, so there's not a heck of a lot as far as economic data to point to today. We are going to get a Chicago PMI reading coming up at 9:45 this morning. If you're hearing that for the first time, it's Purchasing Managers Index. Just a reading on in the manufacturing industry how much purchasing managers are buying to make stuff that we buy. So it's kind of boring.
Well, it's input costs are always a factor, especially for goods providing companies. Keep an eye on that. We had a couple of bond auctions yesterday and the day prior. Brendo, the 5-year, the 7-year. The 5-year was quite market moving. People watching will recall that. Yeah, not too much to report. I just want to see if this rally is going to continue into next year. We know what happened January 3rd, 2023. It was the beginning of one of the biggest moves up I've personally seen in my short time here watching these markets, Brenda.
Yeah, as far as Tesla is concerned, it's been, it was pretty weak over the past couple of days here. Hanging on to the bottom end of the range, I guess, this morning. A little bit positive on the day. I mean, there's not a heck of a lot moving around so far this morning, guys, but Tesla a bit of a laggard so far the past couple of days here.
I want to show you a little known trick for finding low price stocks on the verge of moving higher. It all starts with this little blue arrow you can see right here. What you're looking at is a real-time
Yeah, yesterday we didn't have. Just working on this sticky note, of course. Yeah, yesterday on Tesla we didn't have. Yeah, I've told you, Fabian, I can't hear Brenda or anybody right now. It's just really super choppy, so I turned it off. But Tesla right now. Look, yesterday I don't know what happened there, Brendan. Yesterday to Tesla, honestly, we were talking about it. There was that Xiaomi car that was released. They're not making money on it. It's $125,000. Thing is, there's all these real cool sports cars and all that kind of stuff that are now coming out. You know, that's always been the case with cars. New models, new ideas. I just don't know if anybody's going to be coming at the king the way people think they are. Tesla still is a great name and a great stock to own. And we've talked about that over and over again, even with, you know, Kevin O'Leary and some of the guests that we've had on. Even people that aren't necessarily bullish on the EV space still understand that Tesla is one of, if not the only, U.S. car company that is actually making money on electric cars, that actually has a margin. But the thing is, yesterday when it falls pretty good. There were some rumors that maybe Elon was selling for some reason. I'm not 100% sure, but that's where his wealth is generated from. So if he's selling, I mean, that would cause even the rumor of that happening. We saw Tesla go downside when he was acquiring X, and then that's another story of the last couple years too, is basically the takeover of Twitter. I mean, there's a lot to talk about that happened in 2023. I mean, we had the 16th largest bank disappear at the drop of a hat, basically. All right, so Tesla continues to make a move down, but you know what? We weren't even bought up at the end of the day. Normally, I'd like to see this kind of a move happen and then close somewhere near there. But then we closed on the lows for Tesla. So I think Tesla is probably a short at these levels. I mean, it's getting a nice little bump up here. I yesterday shorted this breakdown of 256, and we had this move. It was a great move, and we never got back into it to try to bust the long. So it's up 0.38. Yesterday's drop, until I can find out exactly why, I'm looking to probably short in and around here, 256, 257 area if we get going again. But it's still, you know, nice downside move. You could see we're not going to get to that 280. I thought there was a chance at 280. The highest we got to was 265. Not horrible. But Obi, we weren't even in the middle of the month. We were down here at 230. So it's had quite a nice move up. Surprising that it's falling down here into the end of the year. But that 260, I think, is still going to be key. You know, we had that 260 long the other day, which was a monster break. And it was my best trade of the day. We made this trade at like 931, and it was my top stock. And I was out of it like at 940 or something like that. It was a top stock all day. So Tesla's going to give us a lot of opportunities. I just like this short in here somewhere. This is, again, a 20-minute chart. We have the 200 period moving average right where we said we'd like to short it. So 256, 257, and then if you're wrong, maybe we just get out at 258 and call it a day. But Tesla's actually not on my radar today. It's the other name. It's going to be Fisker, and we're going to talk about that. We do have Michael Noss coming up. Maybe we can ask him about, I know you guys have a lot of topics going on, but maybe Tesla would be something that he could look at as well, because I feel like that's a name that a lot of traders yesterday were like, oh my God, Tesla's falling down, and we did really well on it. We only made one trade. We shorted that it was either 255 or 256, played the momentum to the downside, and it was a mover in the afternoon. So I think Tesla has a chance to go down even further today.
Yeah, I like the sell on Tesla yesterday. I was just watching it. If there was a name to sell, it was Tesla. But before I talk about Tesla, I just want to shout out D. Westermeyer in the chat. What's up, man? Saying one word before I leave for the Florida Keys. Nice. Confluence. Have a great trading day, and thank you so much for everything that you do, Trader TV. Thank you, Mr. Westermeyer, for being the awesome person that you are. Again, he came to the floor. Remember?
Yes, I was not here. I feel bad that I was not here. But
yeah, you definitely missed out on meeting a great.
I like meeting our.
But yeah, thank you, D. Westermeyer. But back to Tesla here. Yeah, strong selling at the end of the year. So curious to know what we do in and around these prices. We had some trouble pushing that 60, and as Sean said the day before yesterday, 60 came in real hot. But then the day right after, we pretty much wiped that whole price range from the build up into it. So that 260 definitely coming back in. could be interesting. But this 265, kind of the strong selling. Let's see if it continues through yesterday's low 252 as well. So Tesla definitely on watch today. I didn't really take any trades on it yesterday or the day before, but definitely on watch as we're coming into the end of the year, end of the week as well, and some strong price action going into it.
All right, guys, listen up. Amazon AI, it's changing people's lives. With this AI-powered income system, there's no physical products. There's no inventory. There's no storage or shipping of any kind. Plus,
all right, let's bring in, there he is, Michael Na, CMT over at Trade Ideas to wrap up. Not only, I mean, it's been a quiet week, as we've said. Michael Na, it's good to see you.
Good to see you.
But pretty impressive year right across the board, as we were saying, specifically for tech, for the NASDAQ, the S&P, I just saw 24% going into the end of the year here. There are a few, we touched on, going back to last week, the Santa Claus rally, still on track here going into the first couple of days of next week. I think we're up about 1%. If you go back to Tuesday of this week, 1% for the S&P 500 anyway, still positive. But there's a few seasonality things that we want to really be aware of going not only into the end of the year, but into January that you want to talk about today.
Yeah, and it's a good time to do it because as Brendan was saying there, the market hasn't moved very much, so I don't have too much technical analysis to go through today. Next time I'm on, we're going to have end of year charts, we're going to have monthly charts, so there'll be a lot more charts next time I'm on. But I did pop up one. I changed the first slide. I don't know if that messed anything up in the slide deck because I don't know if you can go up one more just to answer Sean's question about Tesla.
I
may not have loaded on your end.
I cannot.
Okay. Okay.
Sorry.
Well, I'll just describe it then. So Sean asked about Tesla. I tried to do something on the fly there, but that's fine. I am with Sean on the fact that I'm pretty bearish Tesla. And the reason for it is just that the Qs, as Brendan was mentioning when I was in the green room, are hitting all-time highs, and Tesla is far from it. And I think that's a pretty simple way to look at a lot of these stocks. If your stock hasn't participated in this massive rally the overall market has, then that means that the institutions, the big money, are not picking this as opposed to something else. So if you're holding something at the end of the year here on lows where the market's on highs, then for me that's something that I want to move on and try to find something else. But sorry for the interlude there, but we'll get into the overall the slide deck here, and we'll start with the actual first slide about the January effect. Because as Brendan was saying, there are three different, and I have notes here that I'll be referring to, but there's three different January barometer and indicators that I want to go over. A lot of these get confused, but they are pretty powerful. So I want to make sure I kind of split these up properly. So the first one is called just the January effect. And this is the one you've probably heard the most of. And that's just the fact that a lot of people think that it means the market's up in January. What it actually means, and again, I really want to shout out the Stock Traders Almanac by Jeff Hirsch. They've been doing this for like 50 years now, where they study these seasonality patterns. In the January effect, what we actually expect to see is small caps and stocks that were weak going into the year to actually start to outperform strong stocks. Now, I have here reverse window dressing. So I talked about this before, about how strong stocks generally continue to be strong into the end of the year. And the main reason for that is tax loss harvesting. So if I have a Apple or Nvidia that I'm up a lot on, and then I have an AMD or an AMC or something that's I'm down a lot on, I'm more likely to sell the one that I'm down on, to defer and to harvest that tax loss against my potential gains. What will happen quite often in January is you see an opposite of that, where now I still like that stock that I'm down on. I just wanted to harvest that tax loss. So I may in January go back and rebuy that stock after whatever the wash sale window, again, I'm not a tax accountant, whatever the wash sale window is. That's the belief of why we think that this reverse effect occurs, where small caps often outperform large caps, and beaten up stocks will often outperform really strong stocks going into January. So I'm not a fan of dumpster diving, but how I like to use these seasonality things is I'm going to spend a lot of my weekend going and looking for stocks that have been hanging out in very low bases for very long periods of time. Think of your ARC charts or Pelotons or something like this, because they may get a lift going into with this January effect. So that's a January effect. That's interesting. Not as interesting to me as this next one, which is the first 5 days. So this first 5 days has an 83% hit rate. And basically what this says is that if the first 5 days of January end up being positive, there is an 83% chance, going back to 1950, which is pretty wild, that the rest of the year will close positive. Now, it doesn't, it could be positive by 0.1%. Doesn't mean we're going to get a screaming up year, but it means that that's generally possible to occur if that first 5 days of trading is the
you can get yourself a notebook.
Next one and the last one is just the January barometer.
Rebroadcast
so
of last
the saying
Friday,
that Jeff Hirsch and the Almanac
since we're coming
Trader
into the
coined
new year,
is so goes January, so goes the
when
year.
it comes
the
to
idea is
technical
simply
analysis.
if January as a whole ends up positive, there is I believe, an 80% chance that the rest of the year ends up positive if you go back again to 1940, I think they did it. So this is 3 seasonality things that I'm really going to be watching into the beginning of January. Basically sums up to the fact that if we see a nice push in the S&P 500 and in small caps in this beginning part of January, then that should be really positive for the overall market. Now, the last slide here is what happens if none of these happen. If both the first 5 days and the January return are negative. I believe this may be from Bespoke, but you can see mostly red. So basically we're focusing on the far right column here. So these are all of the years where the first 5 days were negative and the January return was negative. You can see a negative 38% year, right? 2008. I know a lot of you guys may not have been around for that, but we also have 2000, which was the tech bubble collapse. A lot of these years that started off bad ended really, really bad, and with only a 30% positive rate. So I'm going to be laser focused, and I'm sure at the end of January, I'll tell you guys what the readings were on this. But I'm going to be very, very focused on this first month, because again, if we see these positive, then that's great. If we see it negative, then I think we really got to worry about what the year is going to look like.
Interesting, right across the board as far as the way that January kind of sets the table for what is to come later on. We've touched on in the past as well. One more to kind of consider here. Next year being an election year as well, it would be interesting to kind of go back over that 83% mark and see during election years specifically what the return was.
Yeah, and I guess that's I'll write that down, and maybe that's what next time I'm on we'll talk about, because there is, and this is something we study quite frequently in the CMT, the Chartered Market Technician, there is a very kind of flow of a pattern of the market being nervous before elections and then positive after elections. So I'll grab a chart and we'll see what that looks like. But yeah, it's a very interesting question. How will this election season affect what we're looking at right here?
Fantastic. Michael Noss, Happy New Year. Enjoy the weekend, enjoy the long weekend. We'll touch base again next week.
Talk to you then. Have a good one.
This is Trey. He used our trading robot and passed 3 FTMO $100,000 challenge and got funded $300,000 worth of trading capital. This is my
It's when an educated individual agrees with you. Doesn't happen too often to me, but Michael Noss there looking bearish a little bit on Tesla, so that was nice. Thanks for covering that, and a happy new year to you, my friend. Enjoy it with your family or whatever you are doing for New Year's, and a couple good stats there. That one about the first 5 days, and then creating a positive flow for the rest of the day of year. That's pretty interesting. We'll see what happens in January. I mean, I think these interest rates have been pulled forward, all these interest rate cuts. And if the Fed slips up on this, then I feel like we could be in for a little bit of a swoon in the early parts of the year, especially if the Fed doesn't continue the course, which they're going to. They're going to start cutting. But we have a little bit of a difference in what the Fed rate tool is suggesting as opposed to what maybe the Fed is actually going to do. I feel like we're trying to pull forward about 150 basis points worth of cuts. We'll go over the Fed rate tool in a minute when there's a lot of people out there that are predicting that potentially the Fed might only cut 100 basis points or even less than that. And we still got some data to come in January to see where that comes through. So I'm worried, you know, I feel like the only thing that's stopping this market is going to be the unemployment rate to see where that goes. But hey, right now everything seems to be pretty groovy. And then of course I still have the problem when Xi and Biden had that conversation a couple weeks ago, and President Xi said that he has pretty much full intentions of going into Taiwan, which if and when that happens, I think that could be a downside in this market as well. But always love having Michael Nass on.
Yeah, for sure. It's definitely going to be an interesting year coming forward with the way we've set up this year as well, and changing economic conditions and I guess political situations in the world as well. Definitely could be interesting for market volatility in 2024. I think we have some good price action to look forward to.
I like it. All right, we have some upgrades and downgrades. Do we actually have upgrades and downgrades today? That'd be good. All right, let's go over to the desk, or to the screen, or the desk with Brendan, or the screen with Adara, one of them.
Yeah, one sec. We'll get that set up for Adara and get some upgrades and downgrades here. I was going to mention Fisker, real quick, just to touch on that, up 10% this morning on this deliveries number. I mean, the number itself, not really that impressive, let's be honest, but when it's such an improvement, 300%, in fact, definitely notable.
4,700 vehicles here, Brendo. Look, I get an umpteen amount of ads from Fisker on my Instagram. I don't know what all these ads are for if they can't make enough of them to deliver, but 4,700 is what they handed over. Should be noted, Brendo, that they're going to hand over more in Europe because they've actually contracted Magna International and their Austrian facility, and Magna's actually produced over 10,000 vehicles for them this year. So producing more in Europe than they are in North America, but there's a lot of demand apparently for this SUV.
Yeah, when the price is what it is for Fisker, 10%, not really a huge move, but notable anyways, volume behind that as well so far this morning. All right, as promised, Dara has some upgrades and downgrades for you.
Natera here getting a downgrade from, an upgrade from BTIG Research, and Novus as well getting an upgrade here from Canaccord Genuity. NeoGenomics getting an upgrade from BTIG, and last but not least, Costco getting an upgrade and a price target increase to $7.45 from Tigris Financial. In terms of downgrades, both Nomura downgrading both Uber and Lyft right now, both these rideshare companies, but increasing the price target for both as well. So that one is definitely something to keep in note with regards to Uber and Lyft. ConocoPhillips here also getting downgraded from Raymond James, and last but not least, NeoGenomics here as well, guys. Take
Uber with the downgrade. That's something interesting.
Yeah, I was going to talk a little bit about Uber there, Obi. So
yeah, go for it.
Yeah, I mean, this is basically where I sold, some of my Uber. We talked about this kind of move that happened. They got the inclusion of the S&P 500, and it's kind of like, you know what? I actually read something pretty interesting about. Hold on a second, before I do it, we have to do this. So I was talking with Kathy Wood last night, which I was not, and she was saying that. She thinks that it could be a sell an event type of thing with the Bitcoin and all this approval happening with all these ETFs. So it's a very interesting thing that we got a bump up in crypto, obviously, in the last little while. And I don't know if that's going to happen or not. Bitcoin's still holding out at 42.8 right now. It's pretty strong. And we have HUD 8, and I have longs in crypto today, so I'm excited for the crypto space. But it's about, buying things ahead of a potential event, right? And then, so that reminds me, when I think about Uber, it reminds me of that about Bitcoin. So that's where I'm wondering that is it time maybe to sort of, and she's been a big proponent of Bitcoin. So let's find out if that does happen. We do have another event where there's going to be liquidity supply. I think it was January 10th with the halvening again. But okay, Uber. So what I'm getting at with Uber here is the same kind of thing. We had a beautiful run up there. You know, they're making money. They're a profitable name, and they deserve this kind of a bump up for sure. I think that with everything, like we're going out tonight, so the wife is coming here after we drop the kids at the grandparents. And it's been a freaking crazy week, man. We've been so busy, but tonight we're going out and it's gonna be Uber time, you know? And I feel like that's what it is. I have Lyft on my phone, but I'm just looking at Ubers. And I think that's, you know, Uber Eats, the grocery delivery, like just everything that they're in and the global exposure. I really, really like the name, but I think it's overcooked. I mean, you could still like names that have gone up too high. I love Microsoft, but I don't know what it's doing right now at 375. It's just bouncing around. Maybe it's overcooked too. So what's the next catalyst for Uber? Well, I think you got to wait for earnings. So when I look over here, because the earnings are going to be great, and if they're not, then you're going to get quite a nice move down, giving you a better opportunity to buy it. Short flow, we're not too worried about it, but 3.72% is still relatively significant for this kind of a name, but you know, for an S&P 500 name. Their earnings are February 14th. So we've still got a little bit of ways to go on that. So I just look and say, what are the catalysts moving forward? Michael talked about tax loss and stuff like that and harvesting and possibly buying it back in, but no one this stock is at its highs, so that's not going to qualify for anything like that. I feel like a dip buy is what we wait for here in Uber. I like the name. I just want to wait for earnings. And like I said, I do feel like the new year could be great to start, but then we'll wait to see what happens on that first Fed interest rate cut, I guess, potentially comes through. So we'll wait to see what happens with Uber, but I think it's overbought. And there's no doubt that when that happens, you get Nomura coming in and downgrading. I don't know. I don't think like the downgrade is anything other than where it is on a price, a PE ratio.
Yeah, I think again, it's holding up quite well. Excuse me, in the pre-market off of that downgrade. But some key levels to note coming into again this consolidation. We know that Uber has been running up into its S&P 500 ad, which happened a few weeks ago. Right there, you can see it with the largest volume candle on the chart there. This is the day that it was added, Friday, December 15th. And since then, it's just been consolidating in and around the 61. I know the 61 was definitely interesting, 64 as well. But even with that downgrade, we're still pretty much diddling in the middle over here. But let's see if we can get down to the support. 64 all-time highs. That should be interesting as well. But coming in today, I have no idea if this is going to go one way or the other. But I think these levels are definitely defined. And if the price can get into some of these levels, I think we may have a trade on our hands.
There we go. All right, let's get into the overall market here. Just noting the market itself, not up a ton this week, but potentially set for a 9th straight positive week here for the first time since 2004. Oh, that's crazy. But anyways, there's an entire day to get to here, so let's jump into the futures.
Yeah, we were quite consolidative yesterday, Brendo. Maybe more of that today. 48.30. Is where we closed yesterday on the ES. The overnight high 48.41, the low 48.28. We're at 48.30 right now. I'm going to say look for support at 48.25 and resistance at 48.5 if we make it up there, guys. Let's see.
Yeah, the slow grind continues to the upside here for the overall market. If you haven't done so, very easy. Watchlist.tradertv.live will get you there. Or you can scan that QR code, enter your email address, and then you get that for absolutely nothing. Free every single day from us. NVIDIA, top of the list this morning. Not a huge mover over the past couple of days, kind of chopping around here just below that $500 mark. But notable today because, hey, guess what? Surprise, surprise. They came up with a way to send chips to China once again.
Basically what they're doing here, Brendo, is going to be an adjusted version of one of their best gaming processors. They're terming this one the RTX 4090D. Gamers will know that the RTX line is their high-end GPUs for gaming. I mean, I said this to Sean off camera. I'm like, what's stops people from going into another country, setting up a shell company, ordering a whole bunch of GPUs, and just bringing them back into China? I don't know if they're thinking about that or they're going to have controls, but hey, looking to circumvent.
So the clock starts now on how long it'll take for the U.S. government to respond to this one, because this is the third round as they go back and forth here, guys. But as we said, kind of choppy day yesterday. We're back inside the range here this morning.
Thoma Bravo's Behind the Deal is back with season 2. And this season, we've got even more inside stories.
Well, Sharif, I mean, generally speaking, companies like to abide by the law and will try not to circumvent things, but I agree with you. I mean, we had that story, I don't know if was it Amgen or was it AMAT or somebody was trying to go through South Korea for some things about a month or so ago. So Sharif is right. You know, companies will find ways around it. I'm not upset about it, but I was saying to Sharif again, this is as like, the US has this huge advantage with NVIDIA and AMD and all these chips and AI and just data and processing and all this, and then they're just handing it over to China for free. So that's nice. You know, it's not like China would do that for us or any of these Chinese companies, you know? It's like TikTok just continues to push poison into everybody's face. What? My bad. Sharif is loving TikTok. No,
man.
What a surprise, Sharif.
Here's my thing about TikTok.
I mean, they've literally said that they give us all the crap, and they're giving all their kids all the smart, you know.
Yeah.
I don't know. You guys tell me. I don't even own TikTok. But I mean, and then China won't even give us access to the data or anything like that. Like, anyways, this story might not be true. I mean, that things have changed. When President Trump was around, was trying to ban TikTok and so on and so forth. So, but I'm only simply talking about, and the example is that China for years and years and years have been building up their nuclear power plants and their systems and just way ahead of the game as far as energy and all that is concerned. You think they're giving anything to us, you know? But it doesn't matter how we go on. It's NVIDIA's story. This is technology. Right. Whether or not NVIDIA solves the problem or, you know, Taiwan Semi or someone else comes out with something, it's all the same. And as a shareholder for NVIDIA, I really like the news. I mean, now you open up the border, you get to send these high-powered chips over into, you know, a huge economy, and you know, technology is going to always win the day, and I think it's a punch long. I just want to wait for 5 bills. I mean, there's really, to me, I had NVIDIA on the board the last couple of days as a fade through this 504 because this actually happened up here. It's up here though, but you know that was an actual play 2 weeks ago. And we broke through 500. And again, good news, right? We came from that day, like we came from 495, or even in the morning, even lower, it looks like. We came from like 492, broke through 500, completely stopped at 504, and then made a complete move back down. You know? What do you call a reversed V? Is this like an N? But anyways, all the way up and all the way back down into 490 again, okay? So right now, you're kind of hovering around, and look what's happening. You're starting now at 497. Could we take 500? Of course, easily take 500. But then are we going to get through this 504? Is this the catalyst that starts that move? I don't know. We're up 0.3%. The market's actually down right now. I like this break of 500, and I think I'm going to take it. But I'm definitely not holding it to 504. I feel like 503 would be a great out. 502 would be a great out. Let's watch NVIDIA breaking through 500. On my sticky note, though, is not NVIDIA. And it's not NVIDIA for reasons like I just mentioned. We've already seen this move before. But why not just trade AMD? AMD yesterday made that 150.40 high, okay? I like the long here in AMD, and we talked about it. You can go over, look at it on the sticky note. You can go find it. But AMD yesterday breaks that level, and Obi, I really wish we could still, I don't know why. I'm gonna ask the tech team or development when they come back, because whatever happened to yesterday's marks on the chart? We shorted this 150. Like, look, it came in once, it came in twice, it came in 3 times, sold. We actually let this settle down, right? We did not trade it here. We traded it, and I talked about this. And first of all, if you're not joining on the recap show, you're missing a lot, because I went over this trade yesterday. I didn't short this until we got the all clear from this wick. So people are like, oh, what does that mean? And I discussed it yesterday. It's like, sure, you're getting a lot of big candles. Like this was nice, a lot of tops there, right? It hits it. You have a wick top there, drop. You have a wick top there, drop. Wicking, down, right? The only other time that that happened, it kind of happens in here, but it doesn't have any significant volume behind it. So then I didn't trade it at all. We let it settle down, rips up, hits that 150 clean, breaks. These aren't 150 breaks. This is a 150 stop and a reject. It finally breaks 150, and guess what? Then we get the thing that we're looking for over and over again, a catalyst. We're looking for reasons to short this name. You're not going to short AMD up 3 or 4% in a market that's flat.
Okay, we are watching live. This is a pre-recorded. This was last Friday's show. But what I did find that what I wanted to do was let's see, I wanted to find, let's go back for a minute.
Flat, especially if it's a chip name.
There was a video that they had that I think that would be very good right now to start the new year off with our new traders, and it was how to trade and risk management. So I'm going to let that play in its entirety, and then I will be back for any questions that you have pertaining to this pre-recorded live. Oh, they got a lot of good stuff here. We'll be using their information because, like I said, you know, if you are new to trading, just don't take my word on it. I want you to do and want you to see what I actually look at and go through each and every day to make the choices that I need to, you know, going into the market. Like I said, at 5 years, I'm still a baby trader. So I want you to, here it is, November 15th, this is 16th, yeah. So we're going to play this. I'm going to play this for you, and we're going to continue to watch our chart, my chart here. I put in a trade yesterday for a point of a lot to hit 43,006, and then we're going to see if we can ride it long and see if that gets us back up to our original here. So get your notebook out, take some notes. This is going to be on risk management, and you're going to be watching this on the Live Living Legacy channel, and this is rebroadcasted from YouTube on Trader TV Live, which will be on our platform during the day, watching the opening bell and some of their overviews on what they can teach us about the market and what the market holds for us. So as soon as this thing stops buffering, please like, subscribe, and leave a message.
You gotta go find
where
it.
you're at.
We will transfer you over. If it does not, go to Trader TV Live on YouTube. What's up, Sharif?
And here we go.
What is up, beautiful people? Welcome to the Midday Show. That is your girl, Adara, and I'm Sharif. And yes, today we're continuing the topic that we started earlier in the week, risk management, how to manage risk. So we talked a lot about that on Monday, Tuesday, and you guessed it, today, Wednesday, we're going to talk about the same thing again, but with a little bit of a different twist. If you want to put up the topics manager, maybe soon. Okay, well, we'll get to that. Setting risk beforehand, Adara. We're going to talk about this before we get into that trade. We've been talking 2 days straight about having a trading plan, right? Part of the trading plan goes without saying is knowing how much risk you're going to set up before you punch that buy or that sell button to go short. You have to know how much you're going to be risking. So let's talk a little bit about that. Now, first and foremost, it's going to have a lot to do with position sizing, but we're going to get to the position sizing in a second. Give me 1 second here. Where are my notes? Where are my notes? There we go. Okay, so if I'm going to get into AMD right now, right? AMD's flying. You saw the Katina man give you that piece of news. Brendo updating us with respect to the partnership there with Mr. Softy. Say I want to punch in here. We're at that 120. So how am I going to adjudge how much risk I'm going to take? Well, a lot of it obviously has to do with how it's trading on the day. It's flat right now, but it got a nice little catalyst. So you know it may be twisting upward. Now, why does that matter? Because if I'm going to go long on a stock that's absolutely depressed on the day, I have to be able to explain to myself, sorry. So I'm getting information from the side. Sean is short AMD 120. He's looking for that rejection at the whole dollar level. So anybody following along with Sean's trade, now he's taking that bad boy short at the whole dollar level. Okay, so back to if I was to get into this trade, let's say I want to go long 120. Let's just say for the sake of example, okay? Well, how am I going to judge how much risk I put? Well, number one, is a stock up big on the day or is a stock down on the day? In this case, it's a little bit flat, but you could say it was definitely a weaker name on the day, no question about it. Look at that 9:30 bell, it rings, we move all the way down from almost at 121 area all the way down to 117, so almost $4 south there. So I would say, you know, getting along into this, into AMD, I would have to make sure that I'm taking the appropriate size. In this case, the appropriate size is small size because I'm going long on a counter trend trade. So that is basically the idea. You want to know what the stock is doing on the day, and you have to judge how much shares you're going to take, or how many shares, I should say, pardon me, you're going to take based on the day's circumstances. Now, I also have to know what the levels are. So in this case, look at this long period of consolidation here at 119, okay? Where 119 was clearly the top. Now, if I'm gonna get in, let's say I punched in long 120, I have to give it at least to 119. And that's just not a random shot. It's not just because it's a dollar. It's not just because it's you know, off the whole dollar level. No, it has nothing to do with that. It's these tops right here. It's telling you, hey, look at me. I am resistance. I am 119. So we know from previous lessons that resistance typically becomes support when they flip. So you have to give it at least to the support level. So two things here so far. One, the fact that it was negative on the day. Two, three things. Two, that I'm punching in almost almost at day's high, right? That 120 is the after the bell high. And number 3, I have to take the appropriate amount of shares, given that I have to give it a $1 buffer. And as I talk about that, the Katina man is yelling, and he's excited. He's printing there as it breaks that 119 level. We're going down on AMD. Look for possible VWAP support here. I have no idea. Is selling the news definitely coming in here? So Adara. 3 things so far on AMD with respect to setting risk beforehand. The fact that it was down on the day.
Yes.
And that we have to take that into consideration as to how much shares how many shares, I don't know, I keep saying
Position
how much.
size?
Yeah, position size, how many shares we're going to take. The fact that we're punching in at day's highs, and the fact that we have an obvious resistance level, or sorry, support level, previously resistance, at that 119, making it a $1 at least buffer that I have to give it.
Yeah. It's a good point. It's also something I was keeping in mind. I've been talking a lot about trying to be very cognizant of not punching in at day's highs, even when something is long and strong. And so kind of as a contrast to AMD, where you'd be punching in at or near day's highs, you have to be cognizant of that when a stock is on the downside. We have Tesla, which is a stock that I was looking at earlier. Now, we are a couple $5 candles, 5-minute candles in. What am I saying? $5 candles. But I was looking at kind of when we were up here, close to 246, I was considering, this looks long. We are incredibly strong on the day. We have had catalysts with Tesla over the last couple of days. We also have Elon Musk at the APEC meeting, apparently having dinner with President Xi tonight with a whole bunch of other CEOs. So that's, maybe something of note as well. But also, I didn't want to punch in right away because I want to wait and see if what we're having here is more of a retracement, or if we're going to continue to see, a bit of a dip and then more of a movement to the upside. But given that we had so many green candles, now we're seeing red, it looks like it could be more of an opportunity. So sometimes trying to minimize risk is just waiting and watching and being patient and seeing what happens. Because if I punch in too early, then I risk, I risk having a trade that might lose, or might end up heading to the downside. And now you could also say, oh, we're at high of days short from this point out. But that's another thing I'd want to be patient about, because we talked about this a little bit, I think, earlier. But basically, and Sharif and I were having a conversation about this mean reversion trading, where it's you don't want to make sure just because the logic would be if something's going lower, you want to get it for the cheapest price, or I guess vice versa, you want to get it for the best price to sell it for the best value if you're doing a short. But you want to avoid that just in case you're only reacting based on the price action and not what the actual movement is. You want to make sure you're patient and you're not being reactive, you're also being proactive. So yeah, with regards to Tesla, I would like to see if we kind of have, a bit of a green candle to the upside to see if this is kind of going to be more of a higher highs and higher lows type situation, or if we're straight up retracing before I decide to enter there. So that, and then even if I did enter, I'd probably want to start with a smaller position size, because I want to make sure I'm hedging my bets and making these decisions in a safe way with risk management in mind.
Okay, so just basically, let's go over that little part again. So when you analyze trade setups, always factor the stop loss into the equation. So for example, if you're playing a breakout setup, then determine what triggers the stop and the quantity by the price amount or the dollar amount, okay? So in this case, I know I had to give it $1. So say I get in 1,000 shares at 120. That means I'm risking $1,000, right? But we talked about this yesterday. Obviously, your profit targets have to be based on price action. So if I'm going long 120, well, what's the resistance level that I'm dealing with here on the morning? Well, it's 121.60. And again, probably shouldn't put too much stock into pre-market trading. We talked again about that yesterday because it is light. It is traded lightly. Oh, I thought he was talking to me. Okay. Let's actually go to a better chart than this. Let me bring in this chart over here on AMD. Here we go. So if I'm going long 120, I'm just giving you an example. Long 120. Well, I don't want to base it too much on pre-market action, again, because it's sparsely traded at that 120, 150. But if I had to, there is a $1.50 upside. So it'll be a 1 to 1.5 risk to reward ratio. Not good enough. We want at least 1 to 2, right? Well, is there anything here to justify 1 to 2? Sure, absolutely. From yesterday, 10:45 in the morning or 11 a.m., just right about there, we get that 122.14 break. So we know that there is a local resistance level at 122. We know that there is a positive catalyst on the name. So it stands to reason that
we could make a $2 move off that 120, eventually touching that 122, if not at least that 120, 150. So the stop loss has to be absolutely factored in to your risk, to setting risk before you get into the trade. The resistance level that you're likely to encounter, a price ceiling at, which in this case we know yesterday that 122 level was there, okay? And whether the stock was up or down on the day, so you can know how much share size to take, and that all has to be factored in before. And now, when you do this a zillion amount of times, umpteen amount of times, you're going to do it almost kind of like blindfolded. Okay, you're going to know. You're going to be like, okay, well, this is down 0.16% on the day. I'm talking about AMD. I know for a fact that I can safely probably take about 500 shares here, given my shutdown. Goes $1 against me, I'm down $500. I stand to possibly make at least $1,500 if this runs in the right direction. So you're going to be able to do that right, bang, 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 right away without even thinking. But that is, again, like I've been talking about over and over and over, screen time, screen time, screen time. And guess what?
More screen time.
Right?
There we go.
Literally, right? So we'll have to wait and see how that goes. But what's your look? What's over there? What's the look over there?
Yeah,
Anything
so
to add to that?
the look over here, I can kind of add to that with regards to I did enter Tesla, and the reason I did that, because I know we are dripping a little bit, I wanted to wait and see if we had more of a retracement, but I was noticing, although these dark pool wicks are kind of messing with the chart here, but we have a little bit of a skosh of support here just below 245. So I might have entered a little bit too high, but I had that because I did like that area of support we did have. Now we are bleeding a little bit, or someone mentioned dripping a little bit on Tesla here in the chat. So in order to keep my risk, basically, in order to prove that zone of retracement, I would like to get out if we do dip below this, just above that 244 area, because at that point, that would be kind of, we would not have a higher low. We would have an equal low or a retracement Christmas tree type shape forming. So I'm keeping that level in mind. Had that level in mind when I entered. We are, the amount at which we're bleeding is making me a little bit nervous, but I am going to try to stay, I think the biggest thing, I've talked a lot about this with regards to trade discipline, is I tend to, sometimes, especially when I was early trading, I think I'm getting slightly better about it now, is the second a trade goes slightly awry, I get out of the trade immediately, right? But I think that's why it's so important to have your risk planned ahead of time, because then you know what you're comfortable with in the trade, and you know what it's worth to stay, because sometimes, and I find especially when you're trading a stock as volatile as Tesla, and I think you also have to keep volatility in mind when you're looking at risks and staying in trades, is because especially like around 11, sometimes like these mega cap names can have quite a bit of flush, a lot of volatility to the downside, and then they recover just as quickly. So I think it makes sense sometimes to just kind of stay, especially because it's still within my parameter of risk, although we are slowly and surely approaching the area at which I would like to leave. But basically, yeah, just try not giving up on a trade right away. That's why we have risk in mind, so you know what you're comfortable with, and you know at what point on technical levels it makes sense to stay in the trade, so that you're reacting with technical elements in mind and not just, how you're reacting with nerves, reacting with emotion. So that's kind of why, that's the deal with Tesla trade, and basically bringing this trade and my approach to this trade back to what we're talking about with regards to risk management. I also have a smaller position size because I don't want to put too much into this one position, especially because we could be getting a skosh for Tracy, and I want to wait and see before I potentially add to this or reload.
Okay, let's go on to the next topic with respect to position sizing. Let's go to the AMD over here, okay?
Yeah.
So, let's look at the chart. The size of your trade directly impacts your risk. Okay, so if every share carries $1 of risk, then a 1,000 share position obviously carries twice as much risk as a 500 share position. That goes without saying. That's easy. By taking smaller positions, goes without saying, obviously, you immediately trim your risk. And the thing is, as you get more familiar with the high probability setups, you can increase your size based on the strength of the underlying pattern. And you guys heard me talk about this again. You know I like my chart patterns, the bull flags, the upward channels, the flat bottom breaks, the flat top breaks, yada, yada, yada. We're going to get to chart patterns in, I believe, next week or the week after that. But the whole point is to get into setups that you are familiar with. And the more you see, the more you'll know. Obviously, again, goes back screen time, more screen time, and that will help you, obviously, take larger size. So, using a boxing analogy, throwing small size jabs until a strong setup calls for a larger position power shot. So, you know, if I'm not going to be throwing those haymakers in the first round when my opponent is obviously, you know, still got his wits about him and is fresh, but, you know, when I beat him down in the body for 6 or 7 rounds, then, you know, I can throw that big overhand right. And basically, it's just a really long way of saying the more time you have spent in front of the computer and the more time you've traded, it's going to give you the confidence and, you know, the right setup to take those big positions, right? And what was I going to say? The important part is, though, is not just about having the screen time and the you know, the confidence to take that big position, but the discipline to cut the loss when the stop is triggered. If you're just going to DCA, if you're in dollar cost average into losing positions, you may get out of it once, twice, or even 3 times, but I promise you, you will take that big L and it will wipe out, you know, if a large part, if not all, of your wins. So you must have the discipline to take the stop loss if the setup breaks down. If you predetermined that, say, $200 is your stop loss on a long position, you know, for at $11, and you want to go with a 13 target and your stop loss is 10, you have to maintain that because you want to maintain at least a 1-to-2 risk reward ratio, right? So that's what I'm talking about there. And, you know, position sizing, you're going to notice, is going to be something that you increase over time. And it also is very dependent on the current market conditions. That's what I neglected to mention now, but I talked about yesterday. So for example, in 2021, before November 2021, when Jerome Powell went on Capitol Hill and used inflation is not transitory and said that, you know, it was going to be here for a while and that we're going to have to belt down. Just think about how the longs were acting at that point. I mean, you could have monster outsized days on anything from $50 million market cap to a $500 billion market cap, okay? You really could. We had high single-digit names for some of these Mag 7. They weren't called the Mag 7 back then.
Oh, okay.
But,
I didn't realize that was more recent, the Mag 7.
They used to be called FANG.
Oh, right, yeah, you mentioned, so this was Facebook.
Yeah.
Apple, Netflix, Google.
Yeah.
Okay, cool.
Before that, you could have high single-digit names moves on those names in 2021 and even late 2020, right, when we started recovering from the COVID meltdown. You could have high double-digit names. I'm talking like on Plug Power, the one we were just making fun of today, or Fisker, Rivian, anything like that. We could easily have double digits on those names per day.
That's interesting.
You're typically not getting that now, though.
Yeah.
High single digit, mid single digits sometimes, right? So you really need to be aware of the climate, the economic climate, the market climate in order to, you know, adjudge your position sizing.
Yeah. And also, I guess, to have a better sense of the market that you're entering too, right? Just the context and everything as well. I think that's very important. I think that's something I'm still kind of getting a sense of as I'm learning the market and how we kind of work. Also, you know, I want to reflect back on this Tesla trade with regards to risk. So I did get a bit nervous, as I mentioned, as we kind of dipped a bit lower here, but I stayed in because we did not go into my area that I was going to get out, right? So I did stay in the position. And if I were to reload, because like I said, I didn't enter, you know, a crazy high size here, then you kind of look for areas of support, right? So if I were to reload, then maybe I would consider, you know, take the risk to reward portions and kind of figure out if I'd like to reload at this area here, this 244. Just above 244, because that was where we are having a bit of support, right? We did have kind of a double bottom situation here. And now that we're higher, now I'm, you know, considering where to exit. And I think where I would exit, now that we are a little bit positive, is I would like to kind of take everything out by this 246. And I say that because that's close to the high of day. And I always get worried. I think looking at high of days is really important. Even though the stock, Tesla, is really positive on the day, I'd like to probably take out, and again, back to sizing, about half my position when we get around that 246, because I will be concerned as to how much farther we can go when we get close to that HOD, right? I don't want to get into a situation where we're having like a double or triple top, and then I'm not able to ever, you know, get as much out of these profits as I could, right? So maybe keeping a piece in there for the dream, because because Tesla is, shout out to Cherie for that, yeah. because Tesla is so high on the day. It's a realistic dream. We're not taking any hopium here. We did talk about hopium a bit yesterday with regards to, you know, like not trading based on how you want the stock to move, trading on how it is moving, right? Based on technicals or how you how it makes sense for it to move. So with that in mind, with Tesla being positive on the day and kind of close to HOD, I probably could keep a piece for the dream here. We also have a question from Alex Davis that I really like here.
Go for it. Yeah, I'd love
Conviction has helped tremendously, has tremendously helped me with sizing at key levels of support and resistance. Yeah, that's a good point too. What would you recommend for scalping for position size? So I scalp a lot, and honestly, I will be 100% honest. I think I need to think more about how much position size I use for scalping. I usually and I think back to what you said, I think it depends on conviction. If I'm really confident in a scalp, I tend to put a little bit more into it. And I think if it's one of those ones where I'm trying to get a couple cents, maybe I'll kind of put in a little bit less, right? It really depends on what the stock is doing on the day. Also because sometimes I will, and I've mentioned this, and I think there are mixed feelings on this in the chat as well, but sometimes I will scalp on the range against how the stock is moving. So if we're let's say, if we're kind of moving up on a day that the stock is generally down, I'll just use an example because I have Tesla pulled up here. For example, scalping this range kind of down from 246 to 244, even though we are positive on the day. So if I were to do something like that, which is a bit counter trend, but does have the technicals to kind of support that, then I would probably use a smaller position size because it's a little bit riskier, right? So I would say to answer your question, it depends on how risky of a scalp you're doing. If you're scalping within a range, if you're scalping within this Tesla range and it's positive on the day, you could maybe do a bit larger of position size. If you are doing a short or counter trend scalp, you might want to go a little bit smaller. I think it really depends on the market conditions in which you're scalping, how confident you are in that scalp, and then, yeah, I think conviction, like you said, is huge. I really appreciate your question, and thank you for asking it. But yeah, so right now we are in Tesla.
The C word, Daryl.
Right.
The C.
I forgot you said that, and then Neil was horrified.
Yeah, remember that?
That was really funny. But yeah, conviction, super important when trading. And I think it also, I appreciate that you brought it up, Alex Davis, because it also helps keep in mind, as long as you're within your risk parameters, you can have the conviction to stay in the trade. So I'm staying in Tesla as long as we're kind of within where, we're taking a little bit long to get going, but we're still within that range kind of that 244 to 246 in which I wanted to interact. So I'm happy to stay in this and then take out about half my position around that 246. Yeah.
Okay. Let's go on. Now, we're going to keep repeating these topics. We're just getting to them, introducing them right now. And then as more examples become apparent that we can apply these topics to throughout the show, you're going to see us recycle back to them. And that makes for the best learning experience so that you can actually see the practical application of some of these concepts, okay? So now, adhering to max risk. Let's have a look at the chart here on AAPL. Essentially, this is the most important risk management tool. Set your max loss per trade, per day, per week, whatever the hell you want to do, okay? Just make sure that you're doing it consistently. You can't do it on a per day basis on week 1 and then flip to a per week basis on week 2 unless you plan on adhering to that per week basis from here on in, okay? Once you hit this level, your max loss level, you must absolutely stop out and reassess. This is the fail-safe line, essentially. It has to be adhered to prevent blowing up your account and ensuring longevity as a trader. I talked ad nauseum yesterday about, this anecdotal fallacy that, is prevalent in the trading community, that you have to blow up a couple of accounts in order to really get your feet under you, to know exactly how to trade, to know the value of money, the value of, the stop loss and everything else. It's easy to read it, but you have to actually feel the pain from the loss in order to actually adhere to it from there on in. I want to kind of avoid that, right? May be avoidable, maybe not, right? The reality is that some trading days are actually just going to be your kryptonite, where it seems like you can't make a winning trade to save your life. Recognize those days, okay? Get up, leave your computer, go for a walk, do whatever the hell you have to go play badminton if that's your thing. All right, yeah. Ram like that one.
Play badminton.
Right?
Yeah.
Do something different. Get up. Don't keep, DCAing into it and trying to get yourself out of a hole. You're going to continue to dig yourself a bigger hole, okay? So recognize the days where you're not performing well, where the market conditions are not conducive to your trading style, and adhere to your max loss, okay? Can't say that more. It's easy to spit the words out. It doesn't take much effort on my part. A lot easier said than done. I've done it on this desk. I've done it on my desk at home. I've done it so many times. I feel like a hypocrite saying it, but the fact of the matter is this is how you avoid big L's and to sustain longevity, Adair.
Yeah. So I think that's a really good point. And I think too, it's I think, and maybe this is like, you know, really basic advice, but I think it's really important to remember, especially if you're still starting. Like I'm still obviously very new, but I think the big thing is don't get discouraged. Like just because, especially if you're like, I find my biggest thing too was sometimes you think you have a handle based on, you know, like more limited knowledge perhaps of what the market's doing, what a particular stock is doing, what the chart is, but then you end up making a mistake. It doesn't end up working out well, even if you do kind of have things risk set up. And even I think, especially, you know, as a newer trader myself, when I first began, I wouldn't always set risk the best way, right? I would just like hope it, you know, relying on hopium, oh, it'll definitely come back up. It didn't come back up, and then you end up digging yourself into a deeper hole, as Sharif was kind of referencing, right? So I think the biggest thing is, yeah, like, A, take a break and get up, but B, don't be too hard on yourself. And, you know, if you do see a position set up, I think it was really easy too to doubt myself early on. If I have like one bad trade in the morning, I'm like, oh, well, there's no way this could end up working out. And then sometimes it does go how you think it'll go. Like, don't doubt yourself just because one trade went awry, right? The market does not care about your feelings.
Does it?
As we were saying a lot yesterday. It does not give. It does not care. So the thing is too, is like, don't be so caught up in you. And I know it's really easy to say, I know I've done it in trades, but don't be so caught up in how you're feeling that you forget that, you know, you can have a sense of what you're doing. Just because one trade or one setup didn't work out well doesn't mean that they all won't. Do you know what I mean? So it's really just trusting yourself, trusting your instincts with trading, and also being willing to develop those instincts, but also taking a break when you need to, if that makes sense. And I think even part of that too, to go back to sizing, which you're mentioning earlier, sometimes maybe just, you know, take a position. And this is what I have done sometimes if I had a trade that was a little meh. If you do the next trade, if you feel confident in the setup, maybe take a smaller position size. That's what, you know, I've done sometimes to kind of recuperate from losses. If you do, like, don't force yourself into trades, but if there's a setup that you like, but you're still not 100% confident because you had a previous loss, just take a little bit less. You know what I mean? Smaller position size, and then kind of work your way up to where you're feeling comfortable to take the trades again. But yeah, I think patience is huge. And then adapting to the market environment and trying to, you know, stay true to your convictions in trading. I know I keep saying the word conviction, but it's a big one, especially with trading and risk management. So yeah, just stay hold to your convictions and try not to doubt yourself too much, even though it's very easy to in this cruel, unforgiving market.
Yeah, good question here from Blackberry. He says, Adair, Sharif, great show so far. Just to clarify, because I asked myself what you're trading. It's only stocks, short selling and buying, no leverage puts and calls, etc. That's correct. But I do want to let you know that Day Trade the World, which is the prop floor that we're all working on, and the software that you see here, P Pro 8, come to the screen, Ram. This is all Day Trade the World, and we will be getting 0 day to expiry options. So we will be able to trade options soon, the 0 DTE, as well as crypto. We're also going to get crypto. I'm not sure which coins we're going to have access to, whether it's just going to be BTC, ETH, and the like. Maybe we'll get the Cardano for the Katina Man. We'll have to wait and see on that. But we will have 0 DTE options, and we will have crypto soon. So just want to let you know about that. All right, quickly here. D-Loaf, I need the face slap emoji. My long-term account is singing, and it's 3 times the BP of trade account. I like that. But I'm hesitating, punching long, and joining the trend in the trading account, the TFSA up 40K in 2 weeks. Can you hit the slap face? Because you got that. I don't have that. He's got it. He's got it for you, baby. He's coming. There it is. There's the Katina Man's face slapping. Shout out to you, D-Loaf. I hope you continue to print, my man. And it is nice for for a change, because we've been getting ravaged. The longs anyway have been getting ravaged since July. I mean, we made those July highs, and it's been printing down. The highs, yeah. The lower lows and lower highs. That is until the trend broke. You saw the Neil tell you this morning about the fact that we are at July highs on the triple Qs, which is funny because when he said that, I looked at the NQ futures contract and we're still like 200 points off that. So that 1 point of divergence between the triple Qs and the actual futures contract. So that was interesting there. I didn't actually notice that before. Quickly, just having a look here, seeing if there are any questions. Guys, if you do have questions, please tag me by going at Sharif or at Adara. That way I see the red rectangle and then I could actually see the question. Otherwise, I literally have to read every line by line, and that's just not feasible to do on the show. Blackberry, thanks for your answer. So I guess that the trading rules are for short selling puts, zero DTE, etc., are similar or the same. I can't say that. I gotta tell you, I've never traded options. I've never even bought an options contract in my life, despite the fact that I have the data permissions on my platform here, because I like to look at them sometimes. But with respect to executing options trading, I haven't got the slightest clue. I'm not the guy to ask about that, and I'm sorry. Michael Wu, we're not looking specifically at like what's moving at the moment. Like the Katina Man and the Neil are in the chat. Tag them. They will talk to you about that. But we'll get to that later. We're going to stay on topic for the moment. Okay. Nice. So let's just go over here. Let me look at my notes. With respect to setting, come to the screen. With respect to setting your max risk or adhering to your max risk, we were talking about this, you know, on days where you can't make a trade to save your life. Live to fight another day. Consider the dollar loss, for example, on AMD as tuition. And remember, it can always be worse. Trading is about pressing your strength and pulling back on your weaknesses. Pressing through with your strengths and pulling back on your weaknesses. There you go. Some days will align with your strengths, and some days will test your weaknesses, and that's just the way it is, right? So if you're like myself, I'm a long bias trader, all right? And when the market is selling off and I'm sitting there looking for a long, that doesn't play to my strength. In fact, you know, I may get a win. I may be able to eke out 30 pennies, 40 pennies, something like that. But you see the big kahunas, they go north and they go south, and that's just because they've got the screen time. They've seen the market conditions. They've seen it up. They've seen it down. So again, I keep going back to the same nonsense that I was talking about. It's screen time, and more screen time. I saw Slap Chop guy in the chat saying 3 years, 7 hours a day trading, and he still feels like he's a beginner. Not everybody is going to have the same type of learning curve. Some others are going to be steeper. Some others will be more shallow. And that's just the nature of the beast. Some people are tall, some people are short. Some people learn quickly.
That's a good way of putting it, yeah.
Some people take longer to learn, and that's just the fact of being a human, right? And we're all built different. Yeah. So let me look here at some questions, Adara. Sharuz72, Sharif, what is the difference between a broker account and a prop firm? I'm working with Interactive Brokers. You and I both, my friend. That's my personal account. When I'm punching into Apple, when I'm punching into Li Auto, when I'm punching into Caterpillar and UNG, I'm not doing that on the prop firm. That's their money, and I gotta be done. I literally have to be out of all my positions by 4:15 p.m. or the system will shut me down, and the floor manager will start yelling at me. Get out of your position, close it. But the prop floor is essentially this. It's a company with a lot of money, okay? And what they do is they hire traders and they teach them how to trade. And we've talked about Day Trade the World Campus, right? We talked about that. Yes. And the other opportunities we have here. And what they do is they teach you how to trade. They have proprietary style trades that when they go in the back every Tuesday and Thursday at 1 o'clock, that's what they're talking about, the traders behind us. And they're looking at getting these traders to figure out how to trade. And there's a split that happens between how much of the profit the prop firm takes and how much the trader takes. And obviously, we're not going to get into that. But that's how it is. You trade with their money, and in exchange for trading with their money, you have to give up some of the profits. Now, it's a great opportunity to have because not everybody has a funded account with 50K. And in the States, we know that there is the pattern day trade rule, where if you don't have 25K in your account,
Yes, I did know that. You can't day trade, yeah?
you can't day trade. You have like 3 or 4 trades per week. But then other people get around that. They make multiple accounts and they fund them with they split the money between like 3 or 4, and they trade off like 3 or 4 accounts,
Playing
which
the
is not
system.
illegal.
Okay.
I mean, it's just
it's not illegal. It's just a creative maneuvering there.
Exactly, right? So not everybody has that funded trading account. So coming on a prop floor really helps you learn when you get to use somebody else's money. In addition to that, they're teaching you all the fundamentals of trading. So
Yeah, absolutely.
It definitely helps with that. And there's also cash accounts as well, that we're not going to get into that. Keep going here with some questions, and I'll throw back to Adara. Opinions on coin. I'm long since 9630. Sorry, Linator, we're just talking specifically right now about the topics that we've got up here. B.A. Drine, what % of account would you recommend as a max daily risk for a beginner? Of course, it varies person to person, though. Couldn't agree more. You're absolutely accurate with respect to that. There are numbers that are floated out there. Whether they actually have foundation and reason and logic, completely a different story. But everyone talks about how no one position that you're in a day trade should be greater than 1% of your total account. Now, that's, to me, it's a random number, right? It comes down to a bunch of factors. One, your experience, right? Are you experienced or are you new? If you're new, you should be using the least amount possible, okay? Because you're more likely going to make mistakes, and that's just the nature of the beast. Number 2, what kind of market are you in? Are you a long bias trader or a short bias trader? If you're a long bias trader and you're in a strong market, maybe up that a little bit. But if you're a long bias trader in a weak market, lower that a little bit. It also has to do with how much your earning potential is. Are you adding money into the account every month from your salary, or is it just a fixed amount that you have there and it only increases and decreases based upon the trades that you take in the account? So many factors. I would say be biased to a smaller number, okay? Until you can prove to yourself profitability. And that window to prove profitability is different for everybody. Again, you could say 3 months of being consistently profitable. Some people say 6 months. Everybody's a little bit different. You're going to have your own rules that you follow. There's no hard and fast ones, but I would say err on the side of caution and take a smaller percentage of your work.
Yeah, and I think once you kind of stick to whatever rules you're adhering to, then I think you become kind of more consistent in a way too, right? Because you're not breaking your own rules, and that includes taking less profit than you set out to take, or like abandoning your loss, because I mean you have your loss there for a reason. You're stop, right, or you're out. And so, for example, here I want to talk about this Tesla trade. Also, thank you to Ahmed Al-Moala for the super chat here. Sorry, this was a little while ago. I'm not with you for long Tesla. So, with all due respect, we actually did very well with half this trade. So I would like to talk about it, because I mean I want to tie this super chat back in to this, because it is related to my Tesla trade. I'm assuming that's directed at me because I was in Tesla. But so I mean, I said I wanted to get out of my position at 246. We did. We wound a little bit above 246, and then we kind of had a big swoop to the downside. But I said I wanted to get out when I saw that break of this low, and I was talking like this kind of low area here. We did break it. I got out. I'm happy I did, because we continued to go lower. So this is an example of staying really true to your areas of exit, because I did get to maximize profit. Like I mentioned earlier, I was getting a bit nervous when we were stalling around 245.50, and I almost took stuff out there, but I remembered, I have to stay disciplined to my plan, especially, talking about conviction here. It would be very antithetical of me to be talking about conviction and leaving a trade earlier because I'm not convinced, right? But I stayed convinced because this is why we come up with risk and reward principles, right? So I took out half my position where I said I was going to, took out the rest where my stop was. Honestly, I'm happy with how this trade was executed, even though we did end up losing on half the shares, because we did take a profit on the first half, and I stayed in because we were still adhering to the principles. So I'm very happy with this. I'm going to keep an eye on Tesla as it dips towards VWAP, but for now, I will stay out. Also, really cool question from Rambunk for both of us, but I guess I'll answer for myself. How far into trading were you both when things really started to click and you saw consistent profit? And what did you change? Okay, so for one, I am still a simulation, so there's no profit yet. But I think in terms of like strategies that work, I think honestly when I started scalping more consistently, that was when I really started to see more of a change, or I adhered more to ranges. I kind of found a strategy I liked and I stuck with it, because I think early on I was really convinced to be in like these long-term longs. I was like, oh, I also didn't short at all. And I think once I started shorting, because I felt more confident with how the market moved, and I realized that I had this whole thing on my head that shorting was more risky, which actually kind of comes back to what we're talking about, risk, right? Honestly, as long as you have a plan, it's the same principles as being in a long, right? I had this whole strange like fallacy or bias against shorting, and it stopped me from potential, profit opportunities, right? So I think once I became more comfortable with shorting and realized it's literally the same thing, you just have to have a plan going into both a long and a short, then I found I got more consistent. I was able to kind of have new avenues of getting into trades with shorts that opened up this whole world for me. So the combination of starting to do shorts and feeling more comfortable in shorts, and then also scalping, I think that was when I started to, that's what changed for me with regards to trading, although I am still very new. I saw a question earlier when I kind of initially wanted to get, let me find this question. But yeah, it was something regarding with how did I get started trading from Lethargic? Thank you. So yeah, I mean, I honestly got started when I started here. I've not been trading for very long, but yeah, I think like the more kind of exposure to, the more you learn about the market as well, it gives you kind of, I think, a better understanding of how things move, why things move, and the way that things move both in the market and with individual stocks. So I think market understanding was really key to me understanding trading and kind of enjoying trading as well. So that's with regards, I hope those answered this question. I really like both of those questions. Yeah. Very, very interesting market. And yeah, the Tesla trade, happy I adhered to the risk principles when I did that.
Okay, guys, we are brought to you by Search Trader. Account funding of up to $1 million. Keep up to 90% of the profits. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the folks there at Search Trader, who, by the way, still have that trading contest up there where you can audition with 100,000 fake dollars, and if you win 1,000 smackaroos there, cash money that you can use to fund your account. So who's going to say no to that? Hans Beer, Sharif, how important is a trading journal, and do you have one? So here it is.
Oh.
This is it right here. This bad boy, this big black folder.
I was gonna say, it's like a long folder too.
It is, yeah, but the paper is letter sized though. And here it is, my last entry, okay? I'm not gonna give you my last entry because I'll give you one from December 20th, 2022. This is the trading day. So in the pre-market, I separate the pre-market, I talk about the stocks that I wanted to watch, and then at the end of the trading day, I summarize it. Here's what I wrote. Took an excellent trade on QuantumScape, QS. Got into it fairly early in the pre-market, 8:34 a.m. at $6.33. Only blank amount of shares. I put in brackets, should have been more. It was trending up on news and formed a nice flat top breakout. Had to be patient with this one, but it never broke VWAP. It started breaking out at 9:23 a.m. as I expected it would, like a little bit before the bell. And I sold at 660, which was a pre-selected resting profit taker based on a previous resistance level. And it's not really to toot your own horn and be like, oh, look how good I did on this trade. By the way, I got to get an Apple here because it looks like it's, actually, I'm going to give it a little bit. I'm going to give it to VWAP at 188.58, by the way. There does seem to be some support here on Apple at 188.58, not just because it is VWAP right there, 188.60, but because that was the opening range high. Let's see if we find some support here, but if it breaks that, that's the end of the trade for me on AAPL. Yeah, it's not really just to toot your own horn and be like, oh, I'm such a good trader. No, it's about recapping. Did I follow my rules? If I didn't follow my rules, why didn't I follow them? What was the anomaly here that caused me to break my rules? Did I have the right state of mind? What was my state of mind in the morning? Did I come in upset and from a bad L the previous day and try to revenge trade and overcompensate and take too many shares in a climate and in a market climate that didn't warrant it, etc. It's about articulating the day and seeing where you did well and where you did poorly. It's something that I think a lot of people should do. Coin and a half. How about working with the obvious stocks? High value, high volume. Couldn't agree more. I mean, you see Sean all over that. He loves his blue chip names. The Mag 7. He's always trading the Mag 7. Rarely, nary. Nary, is there a day where he trades a small cap gapper? That's kind of like
I've
my
never
thing. And
seen.
Neil's
I know
thing.
Neil will trade them
Neil
sometimes.
will trade them too.
You
Neil
and
does
Neil.
buyouts as well. So I stay within your wheelhouse there, but I couldn't agree more with you, especially if you're looking for the liquid names. These are the names that are doing always millions of shares per day, and you're not going to have issues getting in and out. But there are ones that are more spready than others. Case in point, Meta, you're always going to find between a 5 to 10 penny spread, despite the fact that it does a lot of shares per day. So, William Knight, Sharif, Adara, the PDT rule, the pattern day trader rule, limiting 1 to 3 trades within 5-day trading period on accounts less than 25K only applies to margin accounts. Cash accounts of any size are unlimited. Yeah, but then you have the 2 days to settle. So you can't even use all the money. So say you have $5,000 and you punched in 5K on, a trade on Meta. You got to wait 2 days to be able to use that 5K again, even though you were up, say, $300. So a lot of people go to margin so that they don't have that 2-day clearing issue, which we really shouldn't have in 2023, quite frankly. But the fact of the matter is we still do. What else we got over here? Any other tags? Any other questions? Pillsbury. I like that name. Now you're making me hungry.
Me too.
If you know where that was.
Yeah,
Pillsbury Doughboy, baby. Come on.
I know all the mascots, but these things with Kool-Aid Man, I feel like I know a lot of them.
Right? If you use a journaling program that allows tagging your trades, that can be very powerful to look at your statistics. Yeah, we talked about that yesterday. We talked about the websites and the services that allow you to upload your trading data, and they give you very nuanced data points. For example, the market caps that you have the best trades on, the time of the day that you pull the best trades, the price, the average price of a stock where you do the best, the sector that you perform the best in. There are so many different data points that they give you. It almost becomes a little dizzying. So I would absolutely recommend that. But, I don't want to say don't too much stock into them, obviously, but
Pun intended.
yeah, there you go. Apparently, I'm wrong. It was a 1-day turnaround for cash accounts. I thought it was 2 days. Sure, 1-day settlement now. Apparently, didn't know that. Haven't had a cash account in my life, so I'm not really sure. Kyle Burdett, Big Kyle. Capital and clearing issues is a big reason so many USA retail traders are migrating to options and 0 DTE. Understood, makes sense. Options are 1-day settlements, says G Hertz. Sure. Let's keep going here. Derek Thompson, actually, it's the next day, not 2 days. Thank you. My mistake there. Have a great trading day, he says at CCDP. So I'm pretty sure we'll absolutely, we will have it.
We will. We are trading.
I have the money a little bit right now on this Apple trade, but we'll have to wait and see how it works.
Yeah, patience.
Yeah, patience.
Part
there
of
you go.
trading. I keep saying
There
it, but
you
it's
go.
very accurate,
All right, Juan Padilla, because you used an expletive, your message was redacted, but I do get your point. Work your whatever off, build $25,000 or more, and and in the meantime, practice and study the market. That's what I did when I was a teen. Shout out to you, Juan. I hope you end up doing well, but remove the expletives next time so that everybody can see your message and I don't have to read it out.
Nice. Yeah, I also I saw a comment from Tammy KB that I really like. I think this one you're talking about like trading different kinds of stocks and kind of staying in your lane. Stay away from small caps if you are a new trader. So as someone, I always talk my first day of trading, I think I was really scared of these mega caps, and I always talk about this Axla. It was a small cap that gapped to the downside while I was in it. I'll pull up Axla. I have no idea what Axla is doing today, but Excella Health is the name of this company. Oh, they're actually up today, but yeah, I mean, obviously now the volume is, to use a Sharif word, negligible, because it's legitimately less than 10,000. But yeah, so it was a day that the volume was up. I liked where I got in initially. I got into it. Things were blissful for about 2 seconds, and then it halted to the downside. And that was like honestly one of the first stocks I'd ever traded, right? So I think you do risk kind of more opportunities like halting to the downside. You know what? I'm actually going to pull up a small cap to kind of exemplify this better. What small caps are moving today? CMMB I know was. So I'll pull up. Yeah, I know CMMB was. So yeah, I mean like. The thing is, yeah, you like obviously like super high on the day, lots of movement here, lots of volume. This one is under $1 now, right? So I think too the thing is, and even when I was trying to trade penny stocks after taking a break when I was like exclusively trading mega caps, it's a different kind of trading too, right? Like because the movements are so much smaller, I think you have to be very attuned to specific market moves. So I think it takes a lot of practice. It's just different styles. And I think that's why like I trade a lot of mega caps or like, you know, Netflix's, Eli Lilly's, what have you, those ones that they move in a bit kind of a speedier way and they require a lot of like, you know, looking at ranges and stuff like that. Those are the stocks I prefer. But yeah, I think Tammy, to your point, and I really appreciate you saying that, small caps on your first day. And I remember even I was, you know, talking to other traders like, oh, what are you trading? And I was like, oh, like Axla or whatever, small caps. And they're like, yeah, most people don't usually start with small caps. Yeah. So I did not know. So I think it's, yeah, I would say of note, stay away from the small caps.
Well, this just goes to show the diversity in everyone's journey.
Yeah.
I started with small caps.
That is true. Yeah, I know you like small caps. So that's interesting.
All about them,
yeah.
Right?
So I take it, you know, people can do really well with small caps clearly when they start trading.
It was a completely different style of trading too.
Yeah, that's
You couldn't respect the name. You knew that it was here today. It may not be here
It was going to hate you the next day, but you were going to love it for the first day.
You could literally take it on the top gap scanner on Monday and find it on the negative gap scanner on Tuesday. And that's just the way it was. You're not going to have that with the Meg 7. It's just not going to be that way.
That's a good point.
Okay, quick question here. There's a question from Sharuz72 Sharif. Can you please explain the prop account? What is this? Oh, the prop account, say 25K. I heard we can get into this high valued account with a little bit of money. I'm wondering, what does that mean? Too good to be true. I'm not sure what you're talking about. You're going to have to explain that a little bit to me there. I'm not exactly sure what you're referring to. Kyle goes on to say, I trade SPX, 0 days to expiry options almost exclusively. Patience, discipline, capital, and a hard stomach are required. And then it moved up. It can be like small caps on steroids. He goes on to say, that's a hell of an analogy right there. Sean Mohud, what are your thoughts on GLD for long-term investment? Okay, so we're sticking to the currently we're sticking to the topics that we're talking about today with respect to risk management. We're not going to get into the specific names of whether I like this one or that one until a little bit later on. Callum, I used to have a very good friend, by the way, named Callum when I was young, and it's a very seldom name. I think it's Scottish, right?
Yeah, I think so. Yeah, I actually know a Callum. I have a family member who's a Callum. Yeah. Full name.
Callum Auer. I'll never forget him. Good friend of mine.
It's a nice name.
Yeah, it is.
It has
was
power.
Double M. This person only has one L though. Double L. Hi Sharif. Adara, do you think trading gets better with a beard or without?
I can't comment on that for myself personally.
Without, definitely. No, I'm kidding.
I mean, for myself, without. So.
Yeah, well, I'd hope so.
Yeah.
But look, we're probably going to have to get out of this Apple if it breaks VWAP. It's holding VWAP right now. If it breaks that 188.50, that's the end of the trade, guys. And we're going to take an L on that, even though we have a couple of beak wetters up here. But
an app L, if you will.
There you go.
Yeah.
There you go. All right, let's see. Hugo, take a look at this previous runner. Hugo, we're just going to talk about, currently we're going to talk about the risk management principles where we're not going to look at specific names at the moment. Yep. So to recap, setting your risk beforehand. Do you have anything specific that you want to add to that from your experience about looking at, like, for example, when you got into the NVIDIA trade, how did you look at risk beforehand? What were the levels that you looked at in order to say, okay, well, you know, this is a good area, but if it comes down into here, then I'm risking X amount. But if it moves up into here, here's what I stand to make.
Yeah.
Did you make that assessment?
Yeah, I can talk about, the Tesla trade I was in earlier. I can definitely talk about that. So basically, I was seeing, so where I got in, it was a little bit of a risky place to get in. So I had to keep that in mind in the first place because we just came off of like what was the high of day, right? So I don't really know how much higher we're going to go from that. I have to keep that in mind. But basically, I decided I would like to get out around this 246 with at least half my position because that was around where we were seeing HOD, right? So my thought process with that is in case we don't go any higher, you know, we'll save a piece for the dream in case we do, to quote Sharif. But, you know, in case we don't, I would like to get out some profits here, right? So that's what we ended up doing. Then in terms of where I wanted to put my stop, which I did adhere to, is at this point we didn't have this double bottom, so this was kind of where we were seeing that other steady move to the upside, right? So I said to myself, you know, it's hard because we didn't really have another bottom, so that was also like a riskier move trying to decide where the risk was going to be. Very meta, I apologize. But yeah, so I think this 244, because I saw that was where we had that nice swoop to the upside, I was like, that's where I'm going to take out if we drop below that area. We did, so I got out. So that was kind of my risk assessment with Tesla. But it is hard to assess something when if you're in a long, you're near the high of day, or when you're in a short, you're near kind of the low of day, or you're heading lower. And actually with that in mind, I want to bring up another trade that I've been, you know, keeping my eye on, watching longingly from across the room, Eli Lilly. This looks like a gorgeous short to me, but I always get a little bit nervous because we are near kind of, we're edging lower. I don't really have any levels on this, right? So it's hard to kind of gauge a range, especially someone who enjoys range trading and scalping, when you don't really have, we don't know where the bottom is really going to be, right? It could be much lower. So you have to definitely have like a stronger sense of risk. So for example, for that, if I got in like here, maybe I want my out to be kind of at this 591 area where we're seeing a bit of strength, right? Actually, to say that out loud, I actually think that could be potentially where I would set kind of the risk in this trade, right? So and you also really have to, I'm not a huge like risk to reward ratio person. So then you have to use more chart clues and book clues, especially for when you have spreads that move like Eli Lilly and Netflix, where they do move a lot more slowly and then all at once. So something worth noting. Also, there's a question from Elon for both of us that
Elon in the chat?
Not Elon, but and Elon.
And Elon, I like that.
It was in regards to can't find the exact question, but it was regards to like trading within troughs and getting in at troughs.
Oh.
If you can put that in there again, just so I can see that, but I'm going to try to remember. Oh, here it is. Hi, Sharif and Adara. Hello. I am mostly able to enter a trade at troughs, but end up losing as I forgo the smaller profit. Then the price action reverses down afterwards. Any guidance? Thanks. So I think part of it is, I think it kind of depends on like where the trough is. So if it's like a trough, for example, let's look at NVIDIA because NVIDIA has been a little trough-ish today, trough-esque. I think like looking at kind of ranges before you enter is kind of a good way to know too, like kind of how much higher it can go. So I think, yeah, for example, like here we did kind of have like kind of steady action within this range of like 490. Also, I cannot believe NVIDIA is at 490 to 494 area, right? So it's like kind of, I guess, having risks set ahead of time too, right? Like let's say the trough does fall out. Then no, if it goes, let's say you got in like at this trough here around 490. Let's say if it goes to 489, then I'm out. But then if it goes to 492, so I guess that would be like a 2-to-1 risk to reward ratio if you want to play it that way. Then that's kind of where I'll get out, right? And I guess all of that is to say, I think, and part of this is what I would do too if I noticed a trade going a little bit wrong and then it reverses to the upside and I would be kicking myself. I think it's because you need to make sure you stay in until it breaks below your area of risk, right? So it's like if it breaks down a couple cents or like 50 cents, as long as it's within your range of risk, then you can stay in the trade. And so then if it does reverse to the upside, especially with a stock like, for example, NVIDIA, Tesla, all these mega caps, they move really quickly and they can often reverse themselves just as quickly. So I would say as long as it's within your range of risk, and that's why I think it's really important to bring it back to what we were talking about earlier, setting risk ahead of time.
Yes.
So that you can be prepared if it does go a little bit awry, as long as it's still within your range and it's still within the range of the trough that you entered at, you should be fine, because I totally get your point. Entering within troughs is a really good strategy because, especially if there's a bit of a range there, buying the dip. But it's also important to not buy when you're like fully flying to the downside, right? So I think part of that is like sometimes it's hard to identify dip as well, which is where I think like, you know, experience comes in, maybe waiting to see another green candle to the upside to confirm that this one is still bullish before buying in, right? So kind of a long-winded answer, but I appreciated your question. I would say a lot of it is just patience and watching to see how the chart is moving.
Okay.
Yeah.
Michael Wu, excellent question, Michael. Would you avoid trading at open market? Now, you see the big kahunas. They're almost always in a position when the market opens. Sean's tried to, you know, hold off a little bit, to exercise a bit more patience, to wait 5-10 minutes, but they're almost always in a position when the bell rings. That comes with experience. But if you are trying to avert or reduce your risk, my suggestion to you would be stay away from the first 15 minutes. You often get the most amount of volatility within those 15 minutes. Like, look, you don't have to be a market wizard to watch the NQ, to watch Apple, to watch NVIDIA at the open. They're quite volatile. They could have a move up $5 and then they could move down. You know, they could be -5, so a $10 move. It really does happen. Maybe it not happens every day, but the point is you have the most amount of market volatility as a general rule at the open, and so because of that, it is harder to avoid risk. And it doesn't mean that you can't avoid risk there. You can have a stop, but it also increases the chances of your stop not triggering because you can have liquidity vacuums. I talked about this on Monday. So when we enter a stop, a limit order stop, we are telling the computer three different things, okay? Firstly, we're gonna tell the computer the trigger price. The trigger price is, this is the price that has to be reached, whether up or down, for the stop to be activated. And then there's the limit price. So the trigger price activates your stop. And then once your stop is activated, the price continues to move, so it could continue to go down. The limit price will be the maximum amount or the minimum amount that you pay for that stop. So for example, getting it out of Apple here. I told you I'd get out of Apple 188.50. So my stop, the triggering price is at 188.48, a couple of pennies below that 50. And then the limit price, so I have to create a buffer between the triggering price and the limit price because there could be pockets of illiquidity, is 188.43. So I'm giving it 5 pennies worth of a spread. And that is not just a hard and fast rule that I apply to all stocks. No, it is dependent upon the individual stocks. What is the current spread between bid and ask? How much has the stock done on the day in terms of volume? Is it spready? Is it have a tendency to have bigger pockets of illiquidity? It is dependent upon the particular fact. And then the third thing that I'm entering into the computer is the share size. And we talked about this. Sean sometimes doesn't get out of his entire trade. What he does, he'll take half off the table. If it breaks, for example, going back to Apple over here, if it broke 188.50, I'm just giving you an example. Sean would say, no, look, I still like the trade. Apple's strong, it's up 0.75%. I only want to get half out at that 188.50 so that I can mitigate my risk by exactly 50%, and live to fight another day. Maybe add to it at 188.25. I'm just giving you a random thing here, okay? So you're entering 3 different pieces of information for your out, okay? And then the problem is the buffer between your triggering price and your limit price may be too tight in the open because the volatility is at its peak, and so your stop may not get triggered, and that's happened to me countless amount of times. I'm sure it's happened to the traders behind me and beside me a countless amount of times as well, where our stops get blown through and they don't get triggered. So if you're trying to manage risk as a new trader, my suggestion to you is stay away from the open, but that is just how I feel. Going down here, coin and a half. I like that name.
That's a funky name.
Yeah. What is the probability of winning if you stick to 2-1 R&R? That's a very good question, and I don't have the answer to that. But you're going to have to do the math yourself. Go and actually do the trades using a 2-to-1 R&R. Give yourself a 3-month window, however long you're going to give yourself, but stick to the rules. Try to have a consistent amount of data. So if you're doing 1-to-1 one day and 2-to-1 the other, your data is going to be skewed and it's going to be worthless, okay? do the math yourself, do the trial yourself, and let me know how that works. I don't have the answer to that. Perhaps maybe you can Google something and find out online. CDP, Adira, Sharif, in respect to risk management, is it better to set reward loss based on percentage or in terms of dollar amount? I don't think there's a hard and fast rule to that. I would say do whatever works for you. If you want to do percentage, do percentage. If you want to do dollar. But the point is to have a consistency in what you're doing so that the data that you collect after, when you reflect on your trades, whether it's at the end of the week, the end of the month, what have you, it is an even data set that you can actually extrapolate valuable information from. So that's what I would say to that, but I wouldn't give you a suggestion as to how to go about that. Going down here, let me see what else is being talked about. BlackBerry, are these spreads just a market thing or can the broker have influence? Very good question. You know, I'm going to have to say that the market maker probably does have some influence on that. It's probably beyond my scope of comprehension. I'd have to do a little bit more research on that before I answered it. So I'm gonna not answer that question, but that is some food for thought. Thank you, Neil. I appreciate you in the chat there. The Neil munching down on the salad, and yeah, get him. Come on, Ram. Ram's banned from putting Neil on apparently now. Maroon 5. Hi, Adira, Sharif. You did it? She didn't. She didn't do it. She's going to do it next time. Okay. Chicago, 1807. Maroon, we're not talking specific stocks at the moment, but the Katina man is back, and the Neil's at his desk. You can tag them. Maybe they can give you a quick synopsis of how they feel. Chicago, 1807. Stop losses are a sucker's game. The bankers and the billionaires don't use it. Okay, so you're no stop loss gang. Like I've seen those online as well. It ain't me. You want to be part of the no stop loss gang? Have at it, my friend. It ain't my cup of tea. I'd rather limit my losses and go to bed at night a little bit more sound than to be part of the stop loss gang. But if it works for you, great. Glenn Smith, can you discuss variations in spread for entry and exits? Okay, so that's a bit of a toughie. Adira, you talked a little bit, you and I talked about spreads a lot. Remember in the beginning, and then you didn't like the spready names? You want to talk a little bit about that?
I mean, as someone whose relationship with the spready names has changed, I think I have an interesting perspective, so I appreciate the volleying over here. I mean, we can talk about Eli Lilly, which is one that I started trading last week, and I really enjoy trading.
One simple but brilliant trick to heat your home in 90 seconds and save thousands of dollars on your heating bill this winter. This genius way to heat any room for almost zero.
So I think this is a really good example of a name that is extremely spread-esque, what have you. There's a spread here. Right now, the spread is about 15 cents for me. Also, I think the other thing worth mentioning too is I know sometimes through mentions in the chat for these names with large spreads, so your Eli Lillys, your Netflixes, some of these small caps, some of the spreads will be different for like different people see different spreads depending on the platform. I have seen that. But yeah, so basically, so I think the thing is too, is with the spready names, something that you have to account for with entrances and exits is like, make sure you set your stop, you set your entrances or your exit kind of still where you want it, because even if you're like, so for example, Eli Lilly, let's say I was initially kind of looking at a 587 point of entrance here, and then I kind of said no to it because I want to wait and see if we have a bit of a flat bottom here. Kind of, you know, based on the pattern we've seen earlier. Not the point, but anyways, so even if you're looking here, you're like, oh, well, it's at like 586.25. How are we going to get to 587? With a spread like this, it can move very quickly and then kind of move back down. Right? So you can, I would say, set your entrance where you want to set your entrance. There is still a chance that you might get it because of the way these stocks move. Then in terms of exits, again, same kind of thing. Be patient. It might take a bit of time to wick into you where you want to get out, but once it does, it will be immediate. And I think the other thing too is what I've learned trading your Eli Lillys, your Netflixies, your Lululemons, is that with these stocks too, it can go right up there and then immediately back down. So you want it, the second you know where you want to get out or where you want to set your stop, set it immediately. And I know I'm very aggressive pointing here, but it's something I feel very passionately about because of how quickly these stocks move. If you don't have your entrance or your out set, but especially with regards to outs, if you want to get out nice and high, right? If you want to get a good place, it can kind of have a wick into that moment and then back off immediately. So if you're ready to go, if you're just chilling waiting for the out, then you're more likely to get it if you're early to the party than if you're late, because of just the nature of how the stocks move and how it can kind of take a little bit of a while to get going. So that's my food for thought with regards to stops and outs on these larger spread stocks. They're fun to trade, but I think also you have to really watch the tape and see how they move, because each tape moves differently, especially with these stocks with larger spreads. Also, thank you to Pico de Gallo for the super chat here, $5 super chat. Buru gains new funding and orders. Let's look at Buru. Do not know if I'm pronouncing that correctly. New Buru on the Amex. I would like to find out what I can about this company. Oh yeah, so it's been awarded a purchase order from a multinational electronics manufacturer. So yeah, this is like a teeny tiny kind of stock. Like I said, you know, different people have different stocks they trade. Truthfully, I haven't really traded many penny stocks or many small caps, and I definitely do not think I have any experience trading penny stocks. This one, volume is all right. It's just under 2 mil, but I find this chart to me to be kind of hard to trade. I will say it looks like this kind of 22-cent level could be key. We could be kind of making our way down to that area. I would say see what we do at the 22-cent even level, but it looks to me like a bit of a downward movement on the day. I'll look at the daily chart for a minute to see what we've been doing at large. Yeah, I mean, definitely still kind of a downward channel, I would say, for Buru. We made a bit of a comeback after sitting at that 20-cent area for a while. Yeah, like I said, I'm sorry, I'm not really the best at analyzing these smaller caps just because I don't trade penny stocks very often. But yeah, definitely looks like it's been beaten up just a skosh. Seeing a bit of a comeback though today on the news of its multinational electronics order, potentially one to watch. But yeah, both on the daily and on the the 5-minute chart, we do look like we're having a bit of a swoop to the downside. Swoop. Still positive on the day though. Swoop. Yeah, that's what we've got going on with Buru. But yeah, I really appreciated the question on spreads, and thank you for letting me answer that one as someone who has strong opinions on spreads. I will say though, don't be scared of a stock just because the spread is larger, because that was my initial approach. But if you take time to read the tape, and I would say it's different for each stock, you can actually, you can do okay with those stocks. You just have to be really patient, wait for the tape, and set those entrances and exits early. Okay.
Quick market update. We're at 15.9. Wow, I was so got used to saying 14.9. We're at 15.9. We're below it right now at 15.890. This is a critical level. You know how I feel about the 100-point levels. Let's see how we trade here. We've given it up right now. Yesterday's close is awfully close to 15.9. It's at 15.880. So I would say we have a support level of between 15.9 to 15.880 on the NQ. But yeah, the market coming back down now. But we're about to go flat on the day if we touch that 15,880. So my Apple trade, this one breaks 50, triggers 48. I'm out of the entire position, and we're going to take a 50 penny or 55 penny loser on that name. But let's see how we do. Critical level here on the NQs at 15.9 and then 15.880. Adam Deleuze, numero uno Arsenal fan, going on to say, sorry, Adam, I couldn't get to your well, it's not even a question, it's a statement. I want to add this because Adam throwing good data here. Hope you are well. I have an algo that has an average of just over 2-to-1 reward to risk. The win rate is just over 40%, just to give an indication on a previous earlier question. Thank you for that, Adam. And the math is simple. If you let your winners at least get you 2-to-1 and you always stop out at 1, and if you have the discipline, you can be wrong about 50% of the time, even a little bit more, and yet be profitable. The same thing goes with the 3-to-1, which is obviously harder. You can be wrong about 2/3 of the time, yet still be profitable. It's a theory, it's more math-based. Whether or not you can execute that in reality, that's a different question, but the math is what the math is, and it's indisputable, okay? So let's keep going here. Glenn Smith, I noticed yesterday Tesla had a much higher spread than normal. What does that tell us? I didn't notice that, and I was trading Tesla yesterday. Typically, when you have a wider spread, it typically means a little bit less volume on the name, but as I look right now, Tesla's already at 90.1 million shares. Yeah, we haven't even got to, well, I was about to say we haven't got to 12 o'clock, but we are at 12 o'clock. Let me look here at TSLA. No, I'm seeing a 1 to 2 penny spread here. Have a look at this. Yeah, where it's very, like, it's obviously moving like
it's
crazy.
Moving really hard. Yeah, but
the spread is
not
tiny.
massive.
It's
no.
like 2 pennies, 1 penny at the most, Glenn. I'm not sure what we were seeing yesterday, but in any event, let's go on. Let's go on here. Hugo Megel told you. I'm not even looking at Megel, to be honest. It's just, you know, we got to do this this education component, so it's not going to be like me, you know, looking at all the small cap gappers and stuff. So,
yeah.
And I wasn't really saying you were wrong or anything, Hugo. Blackberry, Sharif Adera. How important are overnight gaps for entry and exit points? Sooner or later, most gaps want to close, it seems. Look, we're going to get to gaps, but I'll give you a quick synopsis. I use gaps as areas of support and resistance for which to chart, okay? But there is a theory with respect to gaps. Gaps always getting filled. I don't know if that's a hard and fast rule, but if you want to learn about gaps, look at the following 3 types of gaps, okay? 1 is an initiation gap, and it sounds exactly what it sounds like. It's the first gap in a series of subsequent gaps. So an initiation gap usually is a very bullish signal. Google these, okay? And then you have something called a continuation gap, which is basically supposed to appear somewhere in the middle of the big move up. The initiation gap starts the big move up. Typically, it's based on a catalyst. And then the continuation gap, usually some interim piece of information that comes in there that adds on, that piles on to that initial catalyst that caused the initiation gap, and it continues to rise. And then there's an exhaustion gap, and that's typically found at the end of the move. And this usually is indicative of a reversal, an impending reversal coming in. And not a hard and fast rule. You should familiarize yourself with them, practice them, look at them on actual charts, not just in the textbook, and see where you're able to identify them and see how often that principle is right. Was it, like a 50% rate? I know that the book that I read gave me that data. I don't have it on me at the moment, but gaps, you need to learn the different types of gaps and how to identify them on the chart. I'm talking about either the daily or the weekly. I'm not talking about the intraday look, because this is more of a long-term move. So with respect to overnight gaps, I do chart them, absolutely. I want to know where we closed off yesterday, what the 8 p.m., the print at 8 p.m. was, because that's when we stopped trading. I want to know where we opened up at 4 a.m. because that's where we, that's where we start trading. Again, I've talked about aftermarket and pre-market price action and how it's based upon lower volume and must be looked at with a degree of suspicion. Okay, However, I always look at them. They are part
OTC,
of the
that's
overall
OTC
analysis. I
trading.
don't put all the weight in them. Goes without saying. So yeah, hope that helps. Yeah, there's a whole science behind gaps, BlackBerry. There's a whole science behind everything, man. There's a lot. Leroy Jenkins, Sharif, you guys should discuss expectancy as a way to standardize how profitable a system is. Guessing you guys are maybe 0.4 to 0.8 expectancy. I don't even know what that is. It's the first I'm hearing of it now. Maybe I'll Google it and I'll have a look at what you mean by expectancy, but it's not a term that I've come across while learning about trading in any of the books that I've read. And I've read through quite a bit of the first year materials of the Chartered Market Technician, CMA stuff, but
Oh, that's cool.
CMT, sorry.
CMT.
Yeah.
It's very.
Yeah, all right. So it looks like Adara's playing slots, and did she print there?
I
you
did
print?
not print.
You didn't print.
We had low risk to reward. Bringing back to risk and reward, 10 points. So we didn't risk very much, but you know, I'm here to bring it. We're going full circle, right? Yeah, just idly playing slots here. Well, I did have a trade actually that I can talk about with regards to risk and reward and why I entered, why I exited. Arguably got out way too early, but this Nvidia short I would love to chat about. So I got in here because I was noticing. Look at this flat bottom here. We were not able to really overcome this. Where did I get in? What I think like 487, 4760 I believe is where I got in here. And then basically what I said to myself, wait, 487? Yeah, 4760. And then I was like, you know what? We'll get out at 487 even because I was noticing a bit of resistance there. I decided basically in terms of like risk reward as well, like where I would leave. If we kind of got above like 489, kind of about here, I was going to leave. But I was also pretty confident in this one that it was a short just because we did have that breaking of that level. We never really were able to climb up above that 488 as well. So I figured this was a pretty strong short. Indeed, it ended up being a strong short. If I had stayed in, we would have been $2 on the money now. But I think part of it too is that, like we were mentioning yesterday, and I think a little bit today as well, just staying to your convictions. I didn't want to like stay in longer, overstay my welcome, and then lose my profits, right? So I decided, especially as someone who is more scalpy and is I prefer the scalps, the shorter term trades. I did want to stay in this, take my low profits, and say adios to Nvidia. However, if we do continue to kind of break down, I might, flirt with the idea of re-entering this trade. But I did want to stay in this, or I did want to enter and kind of exit this trade where I did because I don't want to stay in the trade for too long. I liked this idea of, taking profits at that 487 break, which I figured we would make. And that's why I kind of ended up doing that. And so in terms of basically back to these risk rewards components, I didn't want to overstay my welcome, so I decided to stay with my initial plan of exit for the reward, set my stop, or I guess my out and my stop, and then it kind of ended up working out. So I was very happy with that. Also with regards to risk and rewards in terms of watching patterns and waiting to see what happens, Eli Lilly now back kind of to the upside. So if I were to enter this as a long, I would like to see if we can kind of break above this 590.50 area, because that was where we earlier were having some resistance, right? And then I think part of it too is kind of like we were talking about this, setting risk beforehand, and kind of I think part of that too, at least for myself, is trying to minimize risk before you enter a position. And so for me, I think seeing that successful break above that previous area where we were seeing, I guess like another, I guess it would be a higher high, if you will, this last year where we had a skosh of a plateau, which would be that 590.50. If we break above that, then I feel like I've eliminated some of the risk of the long. I've seen, we do have some long potential. We do have some momentum here. We do have some, a bit of movement to the upside that would kind of make me more willing to long. But also you have to keep in mind too, the general, not just the general market conditions, but also the general conditions of this. Eli Lilly is still 3.5% to the downside. So I really want to make sure that if I'm to take a slightly counter-trend trade here and go long, I would like to see, the technicals come in. I would like to see the successful break of 590.50. So yeah, just kind of talking about looking at the risk before you enter a trade in real time.
Yeah, I just got yelled at for yelling pump it.
Oh, really?
Because, well, the Katina man, he's still short AMD, and he doesn't appreciate me yelling pump it. So where are you short? No, I'm kidding, man. Yeah, I know you didn't yell at me. He's short 120, and we just got a 118 and a quarter print, so he's about $1.75 in the.
Oh, I like that answering the question. Yeah.
Shout out to the Katina man. We're almost break even here back on AAPL as it holds VWAP to a T right back into 189. 189 was an obvious resistance level on this crest. Does it act again as another resistance level? We've been making lower lows, and there we go. We just made another high breaking through 189. Do we get continuity though on AAPL? It's strong. It's up 0.84. We'll have to wait and see. We just got a low of day or yesterday close hold. We're still below 15.9, so let's not celebrate quite yet on AAPL. Patrick Langlois. Did I say your name? I think it's French. Langlois. Tell me if I'm saying your name right. I hope I'm not butchering.
We've made valiant attempt.
When is the Pampe animation coming? That's for the Chilean Nightmare to decide. It's not for me. He's the yeah, there he is. He put the camera on him, Ram. Come on. He is the what's it called? The animation savant. So we're gonna have to wait for that. But he's busy doing other stuff at the moment. So we're gonna have to put that on the back burner for now. Lucas Burnett. What are the pros and cons of staying in the trade until the next day? Opposed to closing the position and taking the L, you find yourself in the red. Look, I think that's, there he is. See the Chilean Nightmare? That was a Chilean Nightmare right there. No, but in all seriousness, guys, if your stop gets triggered intraday, that's the end of the trade, okay? Now, if you're asking me, look, my stop didn't get triggered at 4 o'clock, do I hold until the next day? I'm gonna have to say no. And I'll tell you why. Because we just talked about this and there are something called gaps. Let's look at it over here. Let me bring in a chart. Let me see if I can find a gap. You know, the problem with this is that I have pre-market data included in these charts. So you won't see a gap. But if I remove the pre-market data here, I bet you I see a lot of gaps. You know where I see gaps? On ADRs. Let's go to BABA on the daily. And yes, here we go. Look at this, for example. Okay, look at this. So on October 18th, say you got long BABA at $82.60, okay? And then you put your stop at an 82.40. Look, the low of the day and even the closing print don't break that 82.40. In fact, the lowest we went that day was 82.75, okay? So no, you couldn't have gotten an 82. So you got in 82.80, my mistake. And you put your stop at 82.40, so about 40 pennies worth of risk. It doesn't trigger on October 18th, but look at the next day. Look at that monster gap down. You gap down, the opening print is 81.30. What are you supposed to do in that circumstance? Your stop is not going to trigger. Because unless you put $1 of a buffer between your trigger price and your limit price, and some platforms will not allow you to have that big of a buffer, I can promise you that. Your stop won't get triggered, and you're going to be out of the money. So I say if your stop gets triggered, if your stop doesn't get triggered by 4 o'clock, get out of the trade, okay? Live to fight another day. Again, you're going to have to make that decision for yourself, but I'm just giving you the consequences of what could happen if you leave your stop overnight. It may not find the triggering price because the gap down will be so far removed from your stop price that it won't get filled. Okay, and that's just the reality of it. So talking about that, what else is being talked about here?
Leroy actually answered your question. I think it was about the expectancy thing.
Yeah.
If you take the average result of your trades for the last week and divide that number by your average risk, you will find the expectancy for the last week. I honestly think I would need to do more reading about that truthfully as someone who I kind of use.
Same.
I know you usually do like higher highs and higher lows.
Yeah.
I kind of do the same thing when I'm looking at my points of entry and stuff. So yeah, I honestly, that's very cool. I will have to read more about that. But as someone who kind of uses more chart movement and then bases my price entrance on the chart movement, then I honestly can't super answer that question in a satisfactory way at this moment. You know, I can, like, with regards to even looking at the chart movement for risk, yeah, I'll talk about this NVIDIA point of entry. So this one I got in, I was in a short. Someone was asking earlier, I think it was in a pickle in a chat, do you ever go long and short on a stock on the same day? Yes, I have. today I have, especially as someone who likes the shorter term baby positions, very much what I'm doing right now. We got short. I noticed a little bit of a support bottom-ish kind of area forming on NVIDIA. Decided to enter. Obviously, I do have to, take into account the risk that is going long in a stock that is down in the day, but I do have my level set. If we break this on 485, I'm outie, au revoir, sayonara, adios. I want to get out, I think, at 488, and the reason I say 488 is because that's where we'd be testing the earlier kind of plateau or high, right? And so that's where I want to take out at least some of my position. I'll still have to decide how much I want to take out, but I definitely want to be taking at least some profits at this 488. And I'm confident staying in this. We're still staying nice and above that 487 area. I do think we have a bit of range. We've had so much support and a nice, clear kind of double bottom-ish area happening on the 5-minute candle at that 486. So that's kind of the rationale behind this trade. Also still, sorry.
I just wanted to make a point because I was talking about stop losses in the aftermarket and I didn't make one very specific point. Okay, so aftermarket orders, whether they're buy orders, sell orders, stop losses, you cannot use limit orders in the aftermarket. Sorry, you cannot use market orders in the aftermarket, okay? You can only use limit orders. If you have a market order, for example, when I use my platform here and I use a stop, if it's a market stop and it's after 4 p.m. or if it's before 8:30 a.m., it will not trigger, okay? It just won't. You have to use limit orders for stops in the pre-market and in the aftermarket. And that is why it causes that kind of distortion where you're going to be like, okay, well, why don't I just put a market stop in the aftermarket, and if it gaps down, it gaps down. It's a market order. It'll trigger me. Well, it won't, because market orders do not trigger in the pre and in the aftermarket. It's just as simple as that, okay? They don't trigger on pre-pro rate, and they don't trigger on IBKR. So I have, two different areas of experience with respect to that. There is no stop aftermarket. That's what I was saying to you, Ivan. I think I might have said it backwards to you, but you cannot use market orders in the aftermarket, and you cannot use them in the pre-market. So you have to have them as a limit order. And if you have them as a limit order, you're going to have to define the spread between the triggering price and between the limit price. If you do that, that opens you up to having your stop blown through. So I'll give you an example. I used to try to do these aftermarket trades with respect to earnings, and I would have two triggering prices. One as a buy above the current price action and one below to try to catch the move, because we get the algo spike. It pops up or pops down, and I was trying to catch the move. So if I put in a value of greater than 3% between the trigger and between the limit, the system would reject it. So for example, let's say Tesla is in the aftermarket right now. It's trading at 243, okay? And I want to catch it if it goes up, if it breaks 244, but because of the area of illiquidity, I put the triggering price at 244 and I put the limit price at 246. If that variance is greater than 3% of the overall price, it won't trigger, okay? And the same thing works for the downside. So that is where you subject yourself to risk in the aftermarket by having to use that limit order rather than a market order. Let's see what people are saying here in response to that. Ivan, stop not working after or pre-market no matter stop limit. That's incorrect. That's incorrect, Ivan. Limit orders work in the aftermarket and they work in the pre-market. That's not debatable. I've used them before. I know for a fact that they do.
Are you just talking about IBK?
Well, it works on P-Pro 8 as well.
Oh, our software.
Yeah.
I just want to say some.
IBKR, market orders don't work in the pre and the aftermarket, but limit orders do. Yeah. Limit order worked, not stop limit. Of course stop limit works. I got to disagree with you, Ivan. I know for a fact that they do. I used to trade on my platform all the time in the pre-market, especially in 2020, 2021 with the small cap gappers, and they always triggered. It's the market orders that don't trigger. Give it another try, my friend. Let's see what we're also talking about here. Stop orders do not work pre or post market, says Prana. Guys, that is incorrect. Stop limit orders work. You're using stop market orders. Those are the ones that don't trigger. Make sure that they're stop limit orders. I'm going to go through this again. That's the last time we're going to say that. Let's see what else here. Leroy Jenkins. Oh, that's about the expectancy.
Yeah.
Read about expectancy in the book Super Trader many years ago. It standardizes results based on units of risk instead of dollar amounts. Higher expectancy equals more dollar per 10 trades. We'll have a look. Absolutely. We'll have a look at that. Let's keep going on here. What else we got? Yeah, I'm not seeing anything in specific. So we'll have a look here at AAPL. AAPL doing real nice here. We're about, you know, like 10 pennies in the money or so, looking for that big move up into that 189.50 area. If we can get anything in and around that high a day, I'll be looking to take some profits around there. John Yates, some platforms have to toggle it pre or after to set the limit order. Yeah, that's just basic stuff right there, guys. You have to enable aftermarket and pre-market trading on your platform in order for them to trigger. If you don't, then you won't have access to it. That just goes without saying. You can put a simple limit if it's a simple limit order. I don't know what the hell that means. Ozan, stop limit will not. Oh my God. Okay, I'm done with this topic.
It seems like
I'm done with this topic.
maybe, you know. Yeah, I was going to say check with your broker, experiment with your platform.
On our platform here, it works perfectly fine. On IBKR, it works perfectly fine if you put a stop limit order. I'm not going to show you how to do it on IBKR, but I can show you how to do it here. Let's go to my screen. So let's just pretend today's right now is the pre-market. I hit my stop price key. And so this is going to be the triggering price. Let's say I want to get out at 188.60, okay? And then I'm going to actually set the sell. So then you'll have another box pop up here. So I have a stop price over here and a limit price over here. Let's say I want to give this room of 10 cents, so I'll say 188.50. And so that will be the buffer between those two. If you have those two in the pre and in the aftermarket, it will work. If you don't, if you use a limit order and you don't have to enter in 2 data points, it won't work. But check with your broker. We'll see how that works out, Adara.
Yes. So in terms of like kind of looking at you know, risk and stuff and everything, I want to talk about this NVIDIA trade. Someone mentioned Adara's NVIDIA, almost $2 in the money. It would be if I stayed in. I did get out early, and I think part of that is because I'm trying to stay, you know, with the principles we had ahead of time, right? I think we talked a little bit about this, like, because you don't want to like risk and overstay your welcome. I know I was talking about this earlier. I find sometimes if I overstay my welcome, if I decide to, you know, stay in a little bit too long, then sometimes it can blow up in my face, and then I regret not sticking and adhering to those principles in the first place. We did get over $1 in the money, though, on NVIDIA. I should have maybe kept a piece for the dream. I think that was maybe the mistake I made there. I know I wanted to get part of my position out at 488. I ended up getting everything out at 488. And, you know, the reason I say 488 is because that's around where we were seeing this earlier plateau. I like to usually set my outs or partial outs around where you're seeing these kind of resistance or support areas, because I know I sometimes we might have a little bit of trouble getting above that. If I continue to see strength in NVIDIA, and if I continue to kind of see movement above this 488.50, because I will say we look like we're struggling a little bit there when I'm watching the tape. We're kind of waffling around 488.50. If we do continue to have strength there, I might go long. If we do see this kind of fall off there from where I initially got in the short the first time around, I might get back in at short it, because I feel, you know, playing the ranges, scalping within the ranges, what I like to do. I'm happy with these levels. I still think 488 was a pretty strong level, because even now we're heading back to it. So now I know from this experience, you know, I'm happy I set my risk ahead of time. I'm happy I got in. And it's, just like looking at levels and not getting into trade too early, which I think is a big thing. And also with regards to that, in terms of, you know, watching and trying to minimize risk by planning your trade ahead of time, as we, you know, set risk beforehand. Like it says on the board here, we were talking earlier about planning as well. And I think that with that in mind, I want to look back at this potential long on Eli Lilly. I said, I want to see what we do at 590.50. If we go above 590.50, I could be enticed into a long. But we haven't yet. So I think that's why, you know, having your plan for risk and waiting until you get to certain levels, as rudimentary as that does sound and as it kind of is, I think it's still really important, especially for me as a newer trader, because like I said, you know, when I first started, the second I saw something at high of day, I'd be like, oh my God, yes, you want to get in on it, because that's, you know, you see something moving, you want to be part of that movement, but you have to wait and pay attention to levels and kind of see what it's doing before you decide to join the party. Scope it out, see how the party's going before you decide to dip your toe in, you know what I mean? Or if you do dip your toe in, maybe with a smaller position size. So with something that like Eli Lilly, which is generally a little bit risky, especially if I were to get into a long, if I do see the support I'm looking for at 590.50, I would probably have a very small position size, and I'd be very careful with regards to my risk and where I decided to get in, how long I decided to stay for, and when I decided to get out. So I think, yeah, kind of finding ways to minimize your risk through planning, and looking at the market, seeing what we're doing, and making sure, especially in a counter trend trade, even if it's a scalp, just making sure that you really have all your ducks in a row before you take them to the beach. I guess you don't. I don't know if you take ducks to the beach, but there we go. My take on that. Yeah. So that's Eli Lilly. I like to see a bit more movement there. Also, yeah, still happy where I got out in NVIDIA because I did stick with my levels, and we are seeming to languish a little bit, just a skosh above that 488. But yeah, risk management in action is what we're trying to do here. And that's also why I know I haven't taken a lot of positions today. I think it's because part of it too is I don't want to be sitting here talking about risk management and then getting into positions just to get into them. You know what I mean? Like, I want to make sure that I'm still taking trades that I feel good about, that I feel have the technical support, and that I'm actually taking my time to look at the levels at. So I'm not just jumping in head first and then falling to the wayside.
Yeah, we're holding 15.9 nicely on the NQ here. We dipped a little bit below, but that was what we were looking at, right? We wanted to see whether we would find some support there. Quickly here, just with the macro view, we had yesterday's close awfully close to 15.9 at 15.880. We dipped as low as 15.884, but essentially held that 15.9 area, and we're holding it now. And this is kind of what we talked about, that general area, looking for wicks below that closing print, and then the body of the candle to close near the support level, and to trend back up. So we're getting a bit of a smiley face or a roundy face, as I said accidentally previously.
I'm not going to let that go.
Right?
It's so
yeah,
funny.
no, I'm good with that too.
There we
So
go.
if we hold 59, it'll be good for some of these longs. So we'll keep an eye to see what we're doing, but we're definitely doing that 189 dance with Apple. So we'll have a look and see what we're doing there. With respect to anything that we've talked to, guys, put in your questions with respect to setting your risk beforehand, position sizing, adhering to max risk. I think somebody just asked me a question there with respect to max risk. Tech22, I've noticed you trade NQ futures, sometimes MNQ, not the NQ. I've got about 100K in my account. Jeez! What kind of size risk are you using? One contract at a time or two or three? So my suggestion to you would be, if you haven't traded futures before, try trading with the Qs first so that you can limit your exposure, because every a quarter point tick is like $2.50 on the MNQ. So it's heavily levered, and it you can get blown out if you don't really trade futures all that often. Start with the SPY, start with the triple Qs. You can even I think there's other ones as well, even cheaper than that. You can use the TQQs, the SQQs. I know that there's S&P ones as well. What was the other one? UVXY? What was XLK? Says the Katia man, that's tech. So I would say before you jump into NQ and MNQ, in order to kind of limit your risk, start with that. See, get a feel for the levels. I don't know if you've already been trading futures before, but if you haven't, I would say start with the ETFs and then kind of work your way from there. So that's what I'm saying there. All right. What is your minimal volume that you would need to see before you jump in? It says DJ Dubs. Yeah, that's a good question. I mean, I don't have a specific number that I can say to you. What I look for with respect to volume is, number one, what's the RVOL, the relative volume? So what does the stock typically do on a day, and what's it done so far? Obviously, the volume per day is by 4 o'clock, sorry. So if I'm trading it at like 10 o'clock, I'm trying to extrapolate whether or not we're going to reach that level and where we would be relative to previous days in terms of volume. But with respect to the small cap gappers, that's a little bit of a different look there, because the small cap gappers typically, they'll have these outsized days. when they get a catalyst and all of a sudden they're pumping to the high side and they may not have done anything for like a month or two. So with respect to that, you know, I look more for RVOL. With respect to the big tech names, I'm looking, do they have a catalyst on the day? I compare today's volume to yesterday's volume or the previous days. I don't have a specific amount that I look for. It's more of an RVOL comparison and a previous day comparison if you don't want to do RVOL. So that's what I look for there. Dat Trader, any views on futures today? Yeah, I just talked about 14.9 on the MNQ. Just talked about that right now. We're dipping below it. Let's see how we do on this last dip here. 15. We're at 15.9 right now. BA Drine, what are your thoughts on only trading the Mag 7 versus scanning for stock every day? I don't necessarily mind that. And that's, you know, everybody's going to have their own thing. Like, for example, Sean, he likes to trade these big tech names, right? He likes the AMDs, the Metas, the Apples, the Googles, the Teslas, the Amazons. You're seldomly going to see him in an MIRA or an SKIN, a couple of small cap
Skin. That was the one yesterday that was down 60%.
Those are not his wheelhouse. He doesn't, you know, that's just not his thing, right? But you're going to see Neil in buyouts, for example. Neil will trade buyouts, and he'll trade some of these small cap gappers as well. So I don't have, you know, I think you should just stick to wheelhouse. But what I personally do is I have a watch list. I have a watch list on the side, and I categorize the watch list by level of importance for me. So the number one thing on my watch list is the overall market. I look at the ES, the NQ, I look at the Dow, the Russell, I look at the 10-year, the 2-year, the 30-year, I look at the US dollar, I look at and gold. So those are the market views. And then below the market, I have big tech, right? I put Netflix, Microsoft, Meta, Apple, both Googles, Amazon, and Tesla. And then just below that, I have the microchips. I have the NVIDIAs, the AMDs, the Intels, the Microns, the TSMs, the ARMs. Below that, I have EVs. And below that, I have Chinese ADRs. So, you know, I categorize my watch list in order of importance for how I trade. And on the top screen, I have my scanner for the small cap gappers that show up, you know, once. They'll show up like on today, for example, MIRA #1 on my gap scanner after the bell, up 36.5%. So that's how I set my things up. Everybody's a little bit different in that regard, but yeah, I hope that helps.
Yeah. Yeah, very interesting times. Yeah, no, I think it's like kind of having, I'm as someone who definitely prefers to trade the mega caps and my specific larger spread stocks. I definitely think like if you trade, the longer you trade a stock for too, the better you have a sense of its specificities, its intricacies, the way that it moves, the way the tape moves, the way the chart moves, specific levels, especially for someone like myself who prefers like range trading and scalp trading, right? I think having a specific kind of set of stocks that you like can sometimes help. That being said though, especially with like the mega cap stocks, people kind of do their own thing 21 anyway, right? They do have that volatility. So it's like you can prefer the stock, but they're still kind of going to move in whatever way they move. So I think with respect to myself and kind of my opinions on that, I think it's like a combination of like having the stocks you like and having your reasons for it, but also if you see something moving, if you feel comfortable, you know, with the levels, what it's doing, what have you, you know, always definitely feel free to enter. But I think part of too why I like having specific stocks that I like trading is because I think if you have kind of certain levels that you like, I think it's a little bit easier to feel comfortable in a trade, especially as someone who is very much still learning. I like to, you know, have the stocks I'm comfy with, have the stocks that I'm not as comfy with. And eventually, you know, if I'm seeing a really clear level, sometimes, you know, jumping in, wetting my beak, if you will, and getting into the trade. Also, shout out to someone in the chat. I think it was D-Money saying that apparently I was incorrect with the duck analogy. I figured I was. I guess he said he's a duck hunter, and they like marshes and ponds and not beaches. That makes sense. Appreciate the expertise there, because yeah, not a beach.
Segue, Dara.
Thank you. Also, yeah. So I would think another thing I was thinking about just now with regards to risk that I think could be a funky conversation would be I guess talking about how it can be tempting to chase, you know, the high of a trade, and why I think it's still important. Even if, like, for example, I saw some mentions of Tesla short squeezing in the chat. I'm not sure if it's doing that, but it's certainly, or not short squeezing, I guess squeezing. It's doing something, Tesla, with regards to the long, and I think why it's important to not jump in a trade just because you're seeing movement. Still evaluate your risk here, right? So I think with regards to myself, would I enter Tesla here? And to what extent would I enter Tesla? I mean, I think it was nice off VWAP. We did have, higher low with regards to this little dip here. We had some support. Now I think I would probably stay out, or if I did enter, I'd do what I did earlier, and I'd get out at 246, or at least part of my position at 246. Why would I get out at 246? Because that's where we've kind of seen this double top, right? And I want to see if we can go any higher. So I might do what I attempted to do earlier, take a piece for the dream, take a skosh out at 246, and then keep the rest in. I said take a piece for the dream, I might keep a piece for the dream. But yeah, I think just something I was thinking about with regards to risk that's interesting is making sure not to chase, don't go chasing waterfalls, don't go chasing movements right away.
Go chasing waterfalls.
In the rivers and the scent that you're used to.
We're brutal.
We tried. We tried. But no, also I clearly did not know the words because I think I said like stint at some point. And no, that's not a word.
See, that's old school stuff.
Very old school, TLC. But anyways, yeah, I think Tesla could maybe use some TLC as well if it wants to get up to 246. I see a pun opportunity. I'm not going to miss it.
Right?
But yeah, so basically, this is all to say, I think with regards to risk management here, just even if you see a nice opportunity like this pretty nice Tesla long, still make sure that you're paying attention to levels and you're not just jumping in because you can, because we don't go chasing waterfalls around these parts without some risk management.
Right.
Yeah.
Lucas, Burnett, Adara, Sharif, if you have a small account while you're learning, would you only trade in stock that you can afford while shares in, or trade in fractions on larger stocks? Like you asked the question about fractional shares earlier, and I've never traded fractional shares. I know I have them available on my platform. I've never used them. I know it gives you the option to do it. Look, I can't answer that question in good conscience without actually having used it myself, so I'm going to have to forego that. But what I would say is, if you are going to trade a stock that is pricier and you have a smaller account, take a smaller amount of shares. I mean, you don't have to get in 100 shares of Tesla. You can get in 10, right? And work your way from there and just gain the repetitions. It's more reps, more reps, more reps. That's what you need. Yeah, I really don't know how to answer that, to be honest with you, because I haven't traded fractional shares. So, you brought in a good point there with respect to, actually, maybe I'll talk a little bit about this after. I was going to talk about my vacation.
Oh.
Yeah.
Wow.
I might be going I'm going on a safari in March, but I was going to take people's opinions about where to go and stuff, but maybe we'll do that another time. Probably won't get into it right now. Adam, it's crazy how have Adara and Sharif singing "Don't Go Chasing Waterfalls," and you have Sean Katina next to them in a serious trade. Oh, he is in a serious trade, like $2.50 in the money on AMD. He would have been like, I don't know, like $10 in the money if he had held that Tesla trade. He had like that 236 long. That was a hell of a trade there by Sean. Shout out to him. He's not there anymore, though. He's, I think he put on his jacket, so he may be going for his walk a little bit right now. Patrick. Okay. Oh, so you mean blowing an account in one trade is not part of the process? No, it typically isn't, unless you're a trust fund baby and you can just re-up that bad boy real quick. No, it isn't. And the thing is, again, we know anecdotally, we've heard a lot about people having to blow up accounts in order to really grasp trading and to understand the emotions behind it. I really would rather not go through that and have anybody else that I know go through that. Just stick to the rules, and if you're able to, exercise the discipline, I really don't think you should have to go through that. So, D-Loaf, take Safari to MTL. Here, the girls are wild. Get out of here, man. You're killing me, D-Loaf. And you have the whole floor laughing, by the way, too. Bears versus Bulls. Are you roughing it? You said you like the Survivor kind of thing. Yes, I do like Survivor.
It's a good question. It's a thoughtful question.
It's fair. I don't know what to expect when I go there, to be honest with you. I don't know what the accommodations are going to be. I want to actually be in the savannah, in the actual safari setting. I don't want to stay at a hotel and then bus to and from. No, I want to be there. If it means, I don't sleep well a couple of nights because there's no AC, then that's fine. That's part of the experience, but we'll get to more of that later. Tell us now, this is Renata. we'll see. Ryan, Botswana. Okay, that's a nice suggestion there. Let's see if that's an option.
Someone mentioned Namibia as well, I believe.
Yeah. Okay, the thing is, guys, here's what I want. You tell me where I need to go. I want to see the lions. I want to see the elephants. And I want to see the gorillas. And I want to be there with the gorillas. Now, I know that there's a whole thing where the rangers, they acclimate the gorillas to human presence by going and spending time with them. Otherwise, they'd be skittish. And they actually take you in the forest, and sometimes you have to walk for hours and hours to be able to find the gorillas because they're not in the same place every day. And then you actually get to hang out with them and to see them eat and, fart, because they fart a lot, apparently, because, they're omnivorous. Or they're not omnivorous. Well, they actually are omnivorous, but they're more herbivores than anything. And I don't know why I brought that up. But anyway, yeah, I want to ensconce myself in that whole environment. So wherever I have to go to see those three animal groups, and to do it easily, that would be where I would want to go. So yeah, let me know which one it is. I haven't done a whole lot of research into that whole thing yet. Tanzania says Ram there in the chat. Zion Lala, what's up, Zion? What does he say here? Sean Katina is killing it in his.
In the wilderness, fearless and human, Sauvage, Elixir, Dior.
In his shorts, he is the hot trader. He is the trader, TV live gangsta. Sean, no. You're killing me, man. Bears versus Bulls, I am cool with camping, but when there are big cats, I may feel differently. That's a good point. Yeah. Lucas Burnett, last question of the day. If you had a $100 account and was adding $100 weekly, what would your strategy be to learn and build the account? I would start small. I personally don't know exactly how much you've got. If you have a $100 account, you're adding $100 to it weekly. So obviously, you're probably still in a cash account as opposed to a margin account. Got this guy writing notes. The Chilean nightmare is killing me over here.
Why?
Get it? Because he's doing that too, right?
Oh, I see.
Yeah. The Chilean nightmare is killing me.
That's too funny.
Yeah, no, I would. There he is. There he is on the. That's the whole production team, by the way, and you can see them quite well there. I don't know how to answer that, Lucas. I got to tell you the truth, that this is not my area of expertise here. I would say start slow and try to make winning trades. Forget about the amount of money in your account. Try to actually make winning trades and see that consistency come, and then the money is going to be there weekly if you're adding to it. So the money is going to be there eventually. If the wins rack up, you're also going to get money from that. Take it easy, take it slow. I don't know how old you are, but I would say trust the process and don't go too aggressively. It's not a race, right? Ozan, Indonesia. There are no gorillas in Indonesia. I believe there are.
That's a random one, yeah.
What are the other ones called? Those brown ones.
Oh my God, I know what you mean.
Orangutans.
Yes.
Yes, they're there. Sharif trying to get primitive, says Slap Chop Guy. Oh, don't you know it, baby. Plans on arm wrestling a gorilla, says Patrick. No, absolutely not. Lori, look up National Geographic Tours. Thank you for that, because I was looking at this other company called Exotica, and they had some good stuff there. But thank you for that. Sharif, first off, Adara, you shooting them or just...
I think it's are you shooting them?
Oh, come on, man. I'm not shooting any of these animals. I'm not hunting.
I was gonna be like, I don't think I'm a part of that question.
No,
I saw that as well, and it looked like the letters are there.
They're cut for. Oh, there we go. It was being blocked by the emoji thing over here.
Oh,
no, I'm not shooting these animals. I'm just there to observe them. I'm not much of a hunter, but I don't have an issue with hunting. I just don't like hunting African, what are they called? Animals of. Yeah, I'm not a big fan of that. All right, I got a silverback, says Kyle. Okay, we go here. Yep. All right, let's stay on point. Siwa, Egypt. I'm from Egypt, so I've been to Egypt everywhere. I've never been to Siwa though. That's interesting.
So I'm to shout out this pun from Bears versus Bulls. Someone was mentioning, with the eggs, to know you're eating the eggs, and Bears versus Bulls said, an expedition. So I need to thank you very much. That's beautiful. Moderating and engaging in the puns with the rest of us.
That is hilarious. Shout out to Bears versus Bulls.
So what were you saying with
Ram was telling me to go to Tanzania. Tanzania, you can say.
A lot of people have mentioned that one here too. Yeah.
Yeah. We'll have to find out exactly what we're gonna do, but yeah, it's gonna be in March. I'm going on a safari in March.
For how long?
I don't know.
Fired.
Why?
You have to tell us how long?
21 days. No, I'm kidding. Sean says
You just go
fired
and then
for
never
sure.
come back.
All right, guys. Sharif.
Wrestle the lion?
No, man.
Look at this.
Holy cow.
Look at
I
this.
didn't actually notice that we were actually
You guys are matching.
We're very close, actually, yeah.
I was going to wear my purple suit, but I didn't.
That's too bad. That's too bad. Missing out on the matching.
Oh, God. Goodness.
Well, at least you guys are, at least someone's matching with someone, right? Even though the purple suit didn't come out today.
No. We've been dancing with this 189 level on Apple for a while now, and we're making lower highs. So a bit of a concern here on AAPL. I just want to talk about this quickly.
See. Okay.
Come to the chart, Ram, if you're able to. And we broke that 189 eventually there, but look at this lower high that we just put in. So I'm a little concerned about this Apple trade. My stop is the exact same where it was before at that 188.48. It hasn't changed, but I am quite cognizant of the fact that we are putting in lower highs here on Apple. I'm trying to keep an eye on the futures as well. We haven't decisively given up 15.9. By the way, we keep breaking down below it, a little above it. We haven't touched yesterday's closing print on the NQ. So I'm cognizant of all that, trying to pack my patience here and see if we can get a move through and decisively through 189, by the way. So we'll see what we look. What? Sean is bidding out of Microsoft. He's looking to get out there. Where are you short?
370.50.
370.50. So he's a couple of $2.50 in the money. We get that 368.07. That's a low day. This one looks like it's headed south, guys. Doesn't look. Softy looks very weak on the day. Quickly here, Kyle. The ES retesting the bottom of the day, so's the NQ. Absolutely. Desi, just got out of my TMO, done for the day, $3 club, money, 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 money. Have a good one. Absolutely, we're going to do that. Go for it. There you go, baby. Jamlocky, Sharif is buying a 3-wheel bike to go safari. No way, that 3-wheel bike is staying in Canada, baby. It's not going to Africa. I didn't go and see it on the weekend, by the way.
You didn't?
No,
You said
I got
no?
way too busy. Yeah, but it's really good, and the guy dropped the price big. Yeah, we'll talk more about that anyway. Where we got here. Have a good one, y'all. Appreciate the show as always. I hope you hold on to your money, man. Very happy for you. Adam is absolutely printing. He says, bang, bang, bang. We're going to hit the bangs for Adam. Very contrary to me, who is now 20 pennies out of the money as we break down again below 189 on AAPL, but still holding that general VWAP area. Ricardo, what is this? Okay. All right. Well, I'll send it to you right now, Adair.
Yeah, of course. Also, just want to say, Blackberry in the chat, thank you for today's charming, clear, and focused session. I have to leave now. Check the Senegal, Sharif. I actually have a couple friends from Senegal, and they say it's really nice. I don't know. I don't think it's for safariing, but they said it's like really cheap and it's really good. That's not not trading related, but I just thank you for
Yeah,
that
let me
comment.
know, yeah.
BlackBerry, and yeah, I also can endorse Senegal from people I know. But also, I want to talk about this Tesla trade, and I want to talk about, again, bringing it back to risk. I sound like a broken record, but we're here to learn. I have to say, this was a big one for me about persevering and staying in as long as it's within your range, right? So I was very tempted to leave this one when we got up to almost 245. I said to myself, if we have a decided break of 245, I am out. I will say adieu. I will say goodbye to this trade. But then, you know what? I was like, we're still within my range. So I decided to stay in, even though it took us a nice long while to have a decided break of these levels. And in case you're like, why'd I get in the first place? Well, Tesla, higher, slightly higher, lower high, slightly lower high. We are having a bit of a compression pattern, but as someone who likes to trade within the ranges, a little bit of compression does not bother me. Do you know what I mean? Probably arguably could have stayed in a little bit longer, as I say that as we have a giant swoop to the downside. So definitely could have stayed in longer. But I liked where I wanted it because I wanted to get just a little bit of profit, take my profit and say goodbye. And I'd rather take less profit than take a larger loss. To quote 21 Savage, taking less L's, making more M's. So that's what I was trying to do here. And I'm really happy I did end up taking the win and didn't duck out just because we did have a little bit of trouble heading to the low side, because it was still a solid point of entry, was a solid trade. We did have a swoop to the downside. Now kicking myself for leaving where I did, because I would have been $2 in the money. But it is what it is, and I got profits. We didn't lose anything, so I can't be too upset about this trade. Just, having conviction and using risk management and not emotional trading, just talking about it in action. Also, this is an interesting question from Third World Big that I'm not sure I know how to answer, but it's a fascinating one. Can you analyze, say, 3 times funds on the dollar index like you would a stock? Do the technicals apply?
I think the technicals apply to everything, to all charting, whether it's crypto, whether you're looking at options, they all do apply. Now, you may have to piecemeal some things in because of the lack of liquidity. I don't ever trade Forex, nor do I trade levered Forex. So my assistance to you in looking at it will be, very little, but I can tell you that the technicals apply irrespective of the actual whatever it is, whether it's an asset class, a security, or what have you. So, yeah, sorry I couldn't really help there, but we are in a bit of trouble now on the NQ because we have broken down
I was just gonna say,
below
they're all
yesterday's
dying.
close on the NQ. Yesterday's close is that important level that we were looking at because it was awfully close to that 15.9. This has direct repercussions on our Apple trade, and so this talks about the risk management. This is perfect example. We had good risk management to the upside yesterday, and today we're going to show it to you equally to the downside. Full disclosure here, as we break down below that 15,880, we're at 15,875. So we've decisively given up that level. Whether or not it's just a quick wick and we get bought up, we're going to have to wait and see. But I would submit to you that Apple outperforming the NQ definitely on the day.
It's not a dead one.
No,
Yeah.
not today. Up 0.73 while you have the NQ now flat. You've got some other names that are really, really taking a hit today. You've got NVIDIA down 2%. You've got Amazon down 1 3/4. Meta's down 1 1/3. You have Microsoft down 1/3%. Google's up 1/4. It's the dead one today, I would say, Google. It's been doing nothing. But AAPL absolutely outperforming the market on the day. Whether or not it continues to do that, a whole different story. Whether or not we get that 189 break to the upside, I would say is definitely not a done deal at the moment, but it is now coming right back down into VWAP. So if we get stopped out, we get stopped out. And that's the end of that. Let's see what else people are talking about here in the chat. Maybe we should just talk a little bit about the topics that we mentioned earlier today.
Course.
Yeah, do you want to start us off?
Yeah, for sure. So with setting risks beforehand, it's kind of deciding before you enter a trade, how much am I willing to risk? What reward do I want to use? And that, or how much am I willing to gain from this trade and how much am I willing to risk? And that's not necessarily, we talked a little bit about risk reward ratios, I believe, yesterday, or on Monday, or both. It's definitely not, it's not necessarily the type of thing where you necessarily have to have a risk and reward ratio, but it's basically just about going in and knowing, hey, at what point am I comfortable in this trade, and at what point would I not be comfortable? Would I like to leave? To and you're doing this to minimize your loss and maximize your profit, right? And I think I'm going to use another example. I've been kind of in and out of Tesla today, and I think that's a good example of staying in, even if you feel a little bit tested, because you do want to maximize your profits. So and that's why you have these parameters, right? So I was getting a little bit nervous in this short as we were kind of having a hard time getting below that, or we were moving up towards 245 and I was getting a bit nervous, but I decided to stay in because I didn't want to throw away my profits just because, or any potential profits, mind you, just because we were having a little bit of resistance, because we were still within my area. I said if we have a decisive break at 245, I'm out, but we didn't, so I stayed in, and I'm happy I did because I made some profit, albeit not nearly as much as I could have made had I stayed in for longer, right? So I think part of that is really just setting the risk beforehand is good so that A, you can get out when it's time to get out, but also so that you don't get out too early and you can really get profit. So I think it's good for risk management in terms of minimizing the actual risk and profit loss, but also maximizing your potential profit gain. And I think that's also position sizing, if I may go into that a little bit too, is I think partially important, because if you're in a more risky trade or a trade that could go a little bit awry, I think you can kind of switch up your position size. You can look at the trade and decide, to what extent am I willing to get in, how much am I willing to risk in like legitimate, share size for this trade, right? So for example, if I were to go, not that I would, because we haven't even broken VWAP, but if I were to decide, hey, let's get in at this short, because we haven't broken VWAP yet, this would be a pretty risky short. I definitely wouldn't take too much of a position here. I'd probably have, a teeny tiny share size. And then I would probably have, especially, let's look at these lows. I'd probably have to use these lows from open here too, these 239. So it's like really just quickly evaluating and then deciding, what position size do I want to enter at? And also, if you want to piece out of your trade, like for example, with this Tesla position here, I took out 246. I saved a piece for the dream. It ended up being a nightmare. But basically, because I wanted to make sure, I did want to maximize profits where I was pretty sure we were going to take profits, and I wanted to minimize my loss, and that's why I took a smaller position size. So that's how both setting risk beforehand and position sizing can help you maximize profit and minimize loss. Yeah. So that's kind of what I have on that. I think, because basically what I'm trying to say is, I know this is kind of long-winded, but I think it's not just so that you can minimize your risk, but I also think if you take a smaller position size and you make good profit on that, then, A, you have profit and you've minimized whatever loss you have, but then B, you can add more if you want to too. You could reload. You can decide, you want to wet the beak, you want to take profits earlier, or you'd like to, take another duck to not the beach, but the pond or marsh, and you want to, get back involved in the trade, right? So I think it's important to think about, don't think about it just as like, oh, I'm minimizing my loss. I think sometimes if you think about it as you're maximizing your profit, it can be more motivating to stay in and to combat some of the mental elements of trading, especially for myself with this Tesla trade here. I did stay motivated for the short because we were still seeing, what I needed us to see to be confident in the short, and I'm happy it paid off.
Okay, and then last but not least is basically adhering to your max loss. Again, this is one of the most important things. You can have a look at the chart. This is the most important risk management rule, adhering to your max loss. Set your max loss, whether it's on a per trade basis, a per week basis, a per month basis. It can be dollar based, it can be percentage based. The whole thing is it has to be consistent. Once you choose something, stick with it so that when you pull the data later, it gives you usable information, not just willy-nilly, and then it doesn't really mean anything. Once this level is hit, you must absolutely stop out and reassess. This is kind of like the fail-safe that has to be adhered to in order to prevent blowing up your account and to increase longevity as a trader. I mean, the whole point is not to be in here for a couple of trades here and there and to print on a couple of, the whole point is we have to be here a while. We want to make a decent amount per trade to accumulate and then, build the account that way. The reality, you can stay on the chart. The reality is that some trading days literally will be your kryptonite. And when it seems like you can't make a winning trade to save your life, you have to recognize these days and the fact that they exist, and you have to have the discipline to walk away until the conditions improve, especially when you hit your max loss on the intraday basis. Live to fight another day. Consider the dollar loss as a tuition, for example, the cost of learning the trade. It can always be worse.
Looking at it, yeah.
Yeah, right? Trading is about pressing your strengths and pulling back on your weaknesses. Think about that. Some days will align with your strengths and some days will absolutely test your weaknesses. I gave the example earlier of how I'm a long bias trader. So on days when the market is absolutely down, I find those days to be the hardest days. But when the market is pumping up, it is a lot easier for me to take those long trades than it is to take those short trades. That's obviously a shortcoming that I have to work on. And, you know, obviously it's not a finished product. Proper risk management means planning ahead of time, cutting your losses quickly when you recognize these kryptonite conditions. So that is basically the thing we talked about earlier, and I just want to reiterate that. Some guy's name is Zamalek. Zamalek 1. What risk to reward do they teach you? Is there a minimum 3-to-1, 5-to-1 for your scalper? First of all, before I answer your question, are you talking about the soccer team Zamalek? Is that what it is? Because like my dad would love you. He's a Zamalek fan. Tag me in the chat. Let me know if that's what it is. Because you know, if you are a Zamalek fan, then you know Al Ahly is way better, right? You know that. I don't have to tell you that. Yes, he is. So that means he's likely Egyptian. Shout out to him. The question, to answer your question, bro, he's not happy about that. Ooh. Yeah, those are like rivals. That's like saying Arsenal and Tottenham.
Oh, really?
Oh, yeah.
Okay.
Oh, my
Yeah, I know enough about Premier League to know that reference.
No, they're not the Premier League. It's the Egyptian.
Well, yeah,
Premier
but
League.
I get the Premier League reference, right? So that I didn't realize there was an Egyptian league.
Yeah,
I had no idea.
Oh, yeah.
Learning new
Egyptian
things every day.
Yeah, it's intense over there. Look, I think that, you know, starting with a more reasonable risk-to-reward ratio, I'm about to get stopped on Apple if it breaks 48 here. So you're going to see full, there it is, and there I am out of Apple. We take a 55 penny or 57 penny loser on AAPL as it breaks down below that $0.50 mark. Looks like even Apple today, which was much stronger than the market, not going to hold up, at least for not now. Let me look at what the future's at. Yeah, we're really giving up the ghost on the future. So L for me today. But with respect to your question, I would say start with a more reasonable risk to reward. Start something like 2-to-1 so that, you know, because when you're first starting trading, you know, your concept and your understanding of you know, winning setups is still tentative a little bit, right? You're still figuring out exactly what the best setups that pay the most are. Once you have more screen time, you're going to know a lot more about that. And I would, you know, you can definitely increase your risk to reward at that time because you're more likely to know when the setup is like an A+ and when it's kind of like a C- or a C+. In any event, I would say start small, start with a lower risk to reward ratio, maybe 2-to-1. And if you, I would say stay away from 1-to-1 or maybe even 1.5-to-1. Try to stick with that 2-to-1, and then as time goes on, add to it and increase it. Down to Sky, shout out, my friend. BTC running, people are saying. BTC over 37K, says Tai. I haven't looked at BTC in a while. Let's have a look. Yes, it is back above 37K. It is absolutely pumping here. Bitcoin, not seeing any particular news item, but we'll show you here quickly. The chart, the 5-minute look on Bitcoin got to 37,275, just a smidge above 37,000 right now, and you're getting a nice move up in some of the equity names as well. You have a nice pump up there in Coinbase, up 6 2/3. Mara is up 9 3/4, and Riot is up 7.5. Even MicroStrategy is moving there about 3.17%. Let me just see if there's any specific headline on any of these names. Now, we know that the spot ETF obviously has been that tailwind, but I just want to see if there's anything coming in right now. I'm not really seeing anything, to be honest with you. Third World Big? That's interesting. Could I also ask, do you ever use 1-minute chart? Any views on this? Much appreciated. Absolutely. I use the 1-minute chart for the small cap gappers. And that's because they are so micro related and they're usually like $1 or $2. I use them to chart. I don't use them to chart. I use the 5 or the 15 to get my levels, okay? If I have to go farther out, I will. Because if there's no recent price action, if it was like kind of just dead for like whatever period of time, and then there's no there's no price action between that time. You're going to go farther to find support and resistance. But I chart on the 5, I chart on the 15, and I execute on the 1, especially with small cap gappers. I don't particularly use that for the big tech names. I like to use the 5-minute chart on the Mag 7 and the related names like AMD and stuff like that. That's my approach to that. The market is Tank City, and the Katina man is getting excited over there. He's $4 in the money on Softy. He's $4 in the money on Softy. We're headed down here. We just broke through 15,850 a day. I hope that helps with respect to the 1-minute chart.
Yeah. I mean, one thing, I use the 1 minute on my side chart sometimes so I can see like the general scope of a movement to decide if it's something that I want to take a further look at on the 5-minute. I do prefer to trade though on the 5-minute. I used to trade exclusively on the 1 minute, and that definitely can be a little bit dicey if you're trying to look at like true levels and stuff for mega caps. So I kind of stopped doing that, but I still do look at it on the side chart. Also, so another thing with regards to kind of max risk, like what, to kind of go off of what Sharif was saying, something I mentioned earlier a little bit as well, is I think one really important thing too is like not beating yourself up too hard if a trade doesn't go your way, right? Like it's just one day, it's just one trade, brush it off, but also like don't stay in a trade too long because you're trying to take the hopium. We like talked a little bit about yesterday. Don't just be like, oh, I can't lose this. I don't want to contest. I don't want to admit this is a losing trade, so I'm going to stay in it, and then it kind of goes lower. You have to act quickly, and this is why it's good to plan trades ahead of time, right? So if it does fail, you can just run away and get out, right? So for example, this Eli Lilly long, which I will admit, very risky trade. I do contend that. I would like to get out probably by 590, and that's because that's been a really nice area here of resistance, and I don't want to mess with that too hard. If we dip below 585, I'm out. So I have my areas of risk, and I know what I want my reward to be. Might piece out a little bit at this 588, take some profits, and then leave a piece for the dream here around 590. But yeah, so basically, like I think as long as you have a trade planned, you don't feel badly if it doesn't work out. You planned your trade, you did what you could, but the markets do not care, and they will react how they're going to react. So you just have to react with it. Don't get too in your head. This is something that I still do sometimes, and I've been trying not to do. And then also, don't have too much superstition around a stock either if it doesn't go your way. So I want to talk about Tesla. Earlier, we did lose a little bit on this Tesla long, but I still saw a good setup, so I did decide to get back in on the short, and it worked out. Like I said, don't be discouraged. And if you see a setup, don't be too afraid to get in. I was having this conversation earlier in the chat with someone. Just do what you can to make sure that you're entering stocks with a good setup. And if you've seen other setup, definitely don't be too scared from your past experiences. Each trade is its own trade, and you need to make sure you bring your 100 as much as you can to each trade. And if you're not feeling up to it, like we were saying earlier, take a walk, play some badminton, play some squash, what have you. Take a break from the market, and then reflect and come back so that you can kind of do your best. But if you do see a setup, I would say take it. Don't be too afraid, because each trade is going to react its own way, and the market will do it'll do its worst. You need to make sure you do your best to combat that.
Very good point.
Thank you.
I do appreciate that point. Faded trader. For real though, the mental part of trading is the most important. Don't stress out. Just set your stop loss and move on. If it's not working, don't keep doubling down. I couldn't agree more. We talked about dollar cost averaging yesterday and how it can be very detrimental if not planned, but it can be very beneficial if planned, if you have levels that you like. Now, there's not always just going to be one level on a chart that stands out to you. There may be multiple. And so if you get in at a quarter position at that initial level, the one closest to the price action, and it continues to trend down, you've already accounted for that in your risk to reward assessment, knowing that if your second dip buy or your third dip buy trigger is at the end of the day, how much do you stand to lose if all of them, if all three are wrong and they all stop out? That is part of your initial risk to reward assessment for setting risk beforehand. Wow, this Apple trade is so frustrating. I literally got bottom wick. Oh my goodness, that's quite frustrating. Look at this. Like I literally am at bottom wick a stop out, and then it's pumping right back up. But it's still doing the lower high thing. If this breaks above the higher high, maybe we'll get involved in it again, but not for now.
It's doing its thing.
Yeah, look, it's moving right back up. This is so frustrating. But anyway, I would say definitely if you're going to dollar cost average, make sure that that is part of the initial plan and that you've accounted for it in your risk assessment. But it's not a bad thing just by itself in isolation. It's bad if you're doing it willy-nilly and you're doing it kind of on a whim. Holy, people are getting really excited back there. If you're doing it on a whim, it definitely will hurt you, especially if you get stubborn and you really start dollar cost averaging every time it makes a dip back down. You'll know exactly what I'm talking about because you'll find yourself however much out of the money, and then you'll end up taking that big L. But if you plan for it, I don't think it's such a bad thing. Let's see what else people are talking about here. Yeah, none of your biz. Would be great if Sean and Neil's positions could be added to the position line. We're already on that, my friend. Coming very soon. Not going to be on here, but stay tuned for more information about that. That's already in the works. We're already on that. Doubling down is often a mistake. It's the opposite of what Sean does when he takes a piece after piece out of a profitable trade. Absolutely. That's the whole point of that, right? When he DCAs, it's because he has those levels already earmarked on his chart. He knows where they are, and it's not just getting in willy-nilly. But if you're going to get in willy-nilly, it's where you're going to find yourself in trouble, and especially when you're stubborn, by the way, guys. What are we doing here? Yeah, that's basically it. Not much more to add to the topics we've mentioned. We've gone through them several times.
Yeah.
We'll have a couple of more lessons on Thursday and Friday with respect to managing risk, and that's the theme of the week. Next week, we'll let you know on Friday exactly what we'll be talking about.
Yeah, and I think too, like part of it is, we're talking about it, but also I think we're trying to show it through specific charts we look at and also through the trades, right? So kind of being able, I think we were always kind of talking through trades, but I think especially, at least for myself, I've been trying, to make sure I'm really like explaining these trades and making sure that I mean what I say. That's why, if I'm in less positions, it's because I really want to make sure I'm in positions that I feel confidently about. So as someone who kind of scalps and trades ranges, I do feel very comfortable in this Eli Lilly long. We are almost $1 in the money currently, and I do have the first portion of my position to go out about here, just because that's, I like to kind of see levels where I actually have a candle here to reference, and then I want to get the rest out there about this area. So yeah, so I have a planning ahead of time, making sure to factor risk into that. So if we do see that break of around 585, I am outie. I am saying sayonara. Yeah, there's no other car brands. I guess it's just Audi. That I was trying to think if there's another car brand, but no other car brand really works with the metaphor. But c'est la vie. In this trade right now, happy with it because I planned it ahead of time and I didn't rush in because I've been trying to find a nice entry point for Eli Lilly all day. But the thing is too is you don't chase it. If you just see it, I saw this on my side chart. I saw we had a really nice double bottom here at 585.5, and I was like, you know what? I want to enter. So it's just like let the trades come to you. Don't come to the trades. And when you do approach the trade, once it's come to you, once you have decided to enter your courtship with the position, make sure that you're still using levels. You're not, it's not. You're letting this relationship between you and the trade really blossom, and then also make sure you know what you're comfortable with, and get out if you need to get out. There we go.
Yeah, absolutely. I'm so frustrated with this Apple trade. Look at this. It's coming right back into that 189. Come on, Apple.
It's been really toying with your emotions.
Yeah. Couple of things, guys. I wanted to talk about a couple of things that are actually moving on the day. Looks like Nat Gas having itself a nice day. I was able to add to my UNG long this morning. Nat Gas up over 4%, and Boyle being the triple levered. Is it triple or double? Twice. It's double. Boyle also having its nice day, 6% to the good today on Boyle. Let me bring in the chart over here. What's going on? What's going on, chart? There we go. Yeah, nice, decent move on Boyle. Coming back down, though, now off that 55 high, coming down to that 54 and change. But Nat Gas, it also having a nice day. The other energy sector today, we have crude down again 1.4%, but some of the crude names are all green. I wonder if that has more to do with the ES, but the CL contract, CL December contract down about 1.5. And that's been, I gotta tell you, I'm not gonna complain about that because, well, gas has been cheaper and I have a V8. So yeah, that makes a big difference. And when it's like $1.50, you know, we can live with that. We can drive to work a little bit more. But when it's at $1.80, it's gonna be that Subway, baby. In any event, Hamptons Trader, my AMD working nicely, 117.10 long. Shout out to you, Hamptons Trader. I hope you print, my friend. Yeah, you're like 50 some odd pennies in the money now. Kill it. Chris RML, do you go short then long then short on something like Apple currently? No, I just went long Apple today. I didn't go short Apple, but this 189 rejection could be a very interesting area to get in short on AAPL. But, you know, talk about managing risk. We already took a slap in the face today. So we're going to maybe have to be a bit more prudent about the trades that we select. So I'm going to take it a little bit easy here. What car does Arun drive? He has a Ferrari, I don't know. Well, what is he have? LaFerrari. He has a Ferrari LaFerrari. Okay?
You said Ferrari, and I was immediately like, okay,
well, there's
this
a car
is fancy.
called the LaFerrari.
I did not realize that.
I don't know what he drives. I have no idea.
LaFerrari.
Dr. J, as a diesel user, I feel you on the pump pain. Yes, I know, because diesel's like always like 30, 40 pennies more than the actual petroleum. Glitch, BTC nasty stop hunt. Oh no, what happened? Didn't look at that. What happened to BTC? Did it come back down? Let's have a look at Bitcoin quickly here. Bring it in. And Apple's pumping. I can't believe this. Yeah, it's an ugly looking chart there, right below 37,000. But BTC, you know how it is, man. Look, I'm going to stay clear of BTC until there's more institutional money in it, but that's just probably just a matter of time before we get more regulation on this. Elon, a calm and steady mentality, definitely also an element for being a good trader. Couldn't agree more, my friend. It's the mental game, really. What's that book called again? What's that book that everybody reads? I forgot. I already read it. Yeah. The psychology book. Oh, my God. I have it. Pardon me? No. It's a trading psychology. Give me a sec. I have it in my my phone. It's in my pages. Give me Trading in the Zone. Thank you, Neil. Appreciate that. It is Trading in the Zone.
I need to look into that.
Oh yeah, excellent book. If you guys looking for a book, are you actually reading that?
Neil.
You're listening to it. He's listening to it. The Katina man is
Oh, it's
listening
in the
to
chat.
Trading.
Okay.
Yeah, Trading in the Zone. I've read it. It's excellent. Give me that. I'll show it.
Just show everybody. See, I'm halfway through.
He's halfway through, baby. What is this? Amazon. What is that called?
Huh?
What is the Amazon book thing called?
Audible.
Audible. That's it. That's Amazon, though. Yeah, it's Amazon. It is. Audible's by Amazon. Yeah. So Trading in the Zone is excellent. It's one of those ones where I think you have to read it multiple times. You know, you could probably extrapolate a lot of the information first time around, but I felt like, you know, the second time around, it really kind of imprinted a little bit more. It's excellent even with respect to risk management because they show you, or he explains basically that, you know, you have to focus on the rules, follow the rules, get the right data. But yeah, Trading in the Zone must read for anybody who wants to actually trade.
I will read that now.
Yeah.
Thank you for the recommendation.
For sure, Trading in the
Everyone.
Zone. That's it.
Yeah.
Tina Man says one good trade is much better. So maybe you should read both. You can't go broke reading both, or maybe you can. Who knows? Henry Chung. Sometimes when I try to tag a host in the chat, it pops up as other types. Other times it doesn't. Do you know why? I do not know why. I don't know. Maybe we'll ask the production team. I don't know why. I know that when you try to tag somebody on mobile, like on the YouTube app on your phone, you have to type in the full name. At least I was told that.
You were explaining that to me because I wasn't aware of that.
Yeah. And then, but when you're on the desktop app or the desktop browser, it doesn't actually have to do that. Hamptons Trade, I want to buy it. There are multiple. Trading in the Zone by, who's it by again? Katina Man, who is that by? Yeah, I forget his name. Mark Douglas. Thank you for that. Yeah, it's been a while since I've read that. Where the hell is it? I had it in my thing over here, but I guess not. Okay. Well, Mark Douglas, Trading in the Zone, that should narrow it down sufficiently there for you guys to be able to buy it. Glenn Smith, have you ever read a trading book and had personal response of rubbish to what was written? Some things I don't agree with. I don't know if I go so far as to call it rubbish. The first book I ever read was Technical Analysis of the Financial Markets by John J. Murphy. That was it's kind of considered, I guess, by some of the trading community as like the holy grail, the one that you got to read initially. It covers everything, man. It covers Dow theory. It covers everything. Okay, point and figure charting, et cetera, et cetera. The other book that I didn't finish, obviously, was the Chartered Market Technician Materials, which I went through substantially but never got around to finishing. There are 3 levels to that, 2 books. The third level is like an essay that you have to write, so it's not really book related, but the first 2 books are quite dense. So I bought them online. You can buy them yourself. They come in PDF format. They're very good. Again, I got to tell you, though, like it's more like Michael Noss's style. Michael Noss's style is more swing trading. He rarely does intraday trading. If he does, it's the exception, not the rule. This stuff that you're going to learn is more for swing trading and trading on a daily or an hourly or 4-hour chart. Let me know how it goes. Tell me your feedback when you guys started on this stuff. But yeah, reading definitely can't hurt you. And it's going to make you feel a bit more confident in the information that you know, rather than just these observations that you're making day in and day out. There's actually text and other people who have done it as well. Kyra Burdett, Adara, Sharif. Also on the mobile app, you have to type in exactly as the name. I know, it's quite frustrating, and people hate typing my last name because it's long and funny written, right? So people do not like that, but what can I do?
Well,
it's not your fault.
I'm going to stop it right here. Thanks for joining me. This is Mike Hayes with the Living Legacy Group, live trading Monday through Friday. And what we're going to do is we're going to take a little break, and we're going to come back at 1 p.m. and we're going to go through the Trading Bible, and we're going to continue our lessons there. If you don't have the Trading Bible yet, what I can do is put that link in the description also. And let me see here. The candlestick. Okay, this candlestick. All right. And let's see where I can find a free one for you guys. If you, here it says download. So that's, I don't like that one. Free PDF. So grab a copy, follow with this through. The reason I like to do this live is because of the fact that let's see if this is a good copy. Sure, this is a great copy. So what I'll do is I'll take this link here, and you type it in the chat. I won't type it in there, I'll just paste it. And then you can follow along with us. And I won't be doing too much of it because today is a holiday still, and I still want to enjoy my holiday. I want to be able to get out and see my family and everything like that. So we'll be maybe shutting it down. I might I might call it quits right now, but I think what I'll do is, since it is the holiday and I've got 29 views today, and hopefully what we'll do is we'll pick it up tomorrow. We'll just pick it up tomorrow with the Candlestick Bible trading at 1 p.m. We'll finish out, and then we will adhere to the schedule tomorrow starting at 8 a.m. in the morning, and we'll go right through. Hopefully we'll have more subscribers. We'll have more people joining the live. I was going to think about throwing it on Facebook Live, but since I'm building an algorithm for the channel here, it will be probably broadcasted from here, and then I will put a link in Facebook where people can join along. We do, now listen, I myself, I prefer to trade in cryptos. I do believe that is the future in money. But if you find that you don't want to do the cryptos and you want to do some of the regular stocks, some of the bigger market caps, things like that, feel free. This channel was built specifically to help people get into the game. And if you don't know about it, that's why I'm going to be running the Trader TV Live How to Trade segments. They're 2 hours because, I'm 5 years in. I'm 5 years still in, and I'm still green, if that says anything. But I know the potential. I know that if I've watched it, I've collected from it. So if you don't have a big bank account, or if you're just starting, we can start you out with just $50. There's nothing you pay here to the Living Legacy. So if anybody ever asks you on my behalf to send them money or something like that, that is a scam. Don't believe it. And we can get yourself a free account, demo account, try it out, ride with us for 90 days. Okay. The worst that could happen is you stop trading. There's no downside, I believe, to it, because once you learn the skill, it's just like fishing. Okay, this can be something that you can add to your bottom line to bring additional income into your home. That is the bottom line. We got to bring you in some money, whether it's in gold, whether it's in cryptos, commodities, it does not matter. Whatever you find that you're more attracted to, learn the knowledge, because then you'll be able to apply that knowledge in whatever market there is. Hey, that's what I have picked up on this in my 5-year journey and beyond. So I want to thank you again for being with me. Let's see, we want to turn that one off. Nope. Yeah, so think about it. There is a lot that you can be, a lot that can be had with learning this new type of a skill, to where you can be able to profit anytime and every time. Like I said, crypto is 24/7, so it never sleeps. I'm a person, I'm overactive, so I like to tune into the markets. I gave you all the information on this live to do your research. There is the Cointelegraph. Go there, learn about the coins, learn about the whole crypto arena. Then go to CoinMarketCap. As you find out, I'm gonna show you on Monday, or on today's Monday. On Tuesday, I'll show you where you can go in the overview. I had a warning today. I got to figure out what that warning was, what I showed that was against regulations. I know about these regulations because they closed my Cash App account, and I don't know why. I wasn't doing anything. I loaded it at a 7-Eleven with cash, and I woke up and it was non and void. But anyways, do the research. If this is something that you find viable, that you can find the time and learn a new skill, this is the one to do it. It's a $7.5 trillion market, and you can get in for the grabbing. So We are going to play our disclaimer. Let's see. Here we go. Okay, so Happy New Year, everybody. And we will tune in tomorrow. Same bat time, same bat channel. Remember that? Yeah. Well, if you don't, some people will, some people won't. So, stay tuned for the next live tomorrow at 8 a.m. This has been Mike Hayes, your sponsor, your friend, and we will see you tomorrow. Thanks.
Hey there, iTrust community. iTrust Capital Rewards is a program that lets you refer friends and family to earn unlimited rewards. Today, we're here to give you the lowdown on how it works. Referring a friend. Log into your account and navigate to your profile dashboard. You'll see a prompt to refer a friend with a button that says Referral. Go ahead and click it. Now enter your friend's email address and you'll receive a pop-up telling you more details. Now they're ready to set up their new account and begin the process of funding. Receiving your reward. Once your friend's account is funded, you'll receive an email from iTrust Capital explaining how to collect your reward. You should receive your reward within 45 days of when your referral funded their account. More referrals equals more rewards. And it doesn't stop there. You can refer more friends and claim more rewards. There is no limit on the number of invites that you can send, and every funded account that you refer will net you more rewards. It's that easy. Visit our website at the link below for more details. Cryptocurrency is a speculative investment. iTrust Capital doesn't give investment advice, so consult your investment advisor.